We have 9 up-and-coming businesses that we're really excited about, and would like to give them a taste of Endeavor to help them grow and hopefully become Endeavor entrepreneurs. Thank you very much.
Let's put our hands together for the dynamic trio. I don't know about you, but I want to be an Endeavor entrepreneur. Thank you very much for all the work that you do in scaling African and global startups and companies. Thank you to Adrian, to Michelle, and to Ire Ayo. Another round of applause for Endeavor, scaling, impact, and investing in the future. Thank you very much. I'm very excited about our following speaker. Our keynote address is someone who has been spoken about by several of the speakers so far. He is somebody by the name of Tayo Oviosu, who is the founder and CEO of Paga. Let's put our hands together for Tayo Oviosu, who will give us a riveting keynote address. Those of you who do not know him, here's a little bit about him. He is the founder and CEO of Paga, which is a mobile payment company really working towards solving for financial inclusion in Nigeria and beyond. And it really enables people to digitally send and receive money. I mentioned them earlier in my welcome address. Let's put our hands together for Tayo Oviosu. I think we can do better than that. CEO and founder of MyPaga.
Good morning, everyone. On behalf of Endeavor, I also want to say thank you for being here. And thank you, Irayo and the Endeavor team, for having me speak. The first time Eloho Omame, the former MD and the first MD of Endeavor Nigeria, came to tell me at Silicon Valley, I knew the importance of a strong ecosystem and a strong support system where companies both compete but also collaborate with each other for the greater good. And so this is my favorite African proverb, and it really embodies how I approach entrepreneurship and how Paga has operated. It says, if you want to go fast, go alone. If you want to go far, go together. And on my journey of Paga, I cannot start the conversation around collaboration without starting with my co-founder, Jay Alabraba. Jay, who is here in the audience, you can wait for everyone, somewhere in the audience, I see him there, yeah. I really lucked out with Jay. And, you know, after taking him to the dingiest of bars and VI, he still agreed to come on this long journey with us and this ambitious vision that we had. And really, the trust and the respect we have for each other is what has allowed this collaboration to flourish. And along with our team, we are going after what we call our massive transformative purpose. We are going after a once-in-a-generation goal. We want to make it simple for 1 billion Africans to access and use money. Now, this all started with my frustration carrying cash everywhere with me in Nigeria. And all of us in this room still have faced and still face the challenges of making payments and of accessing finance. And I like to say that Africa doesn't have a banking problem. We have an access to finance problem, and it's across all socioeconomic levels. I think if you spoke to Aliko today, he would tell you his issues in getting finance, right? And it's everyone that has it at different levels. So Africa has a prolonged financial access problem. Let's start with Nigeria. Nigeria is the largest country in Africa, and also now I think probably the 4th largest GDP, right, after inflation. But one of the interesting things about Nigeria is is the fact that it's the youngest population in the world. Now, there's 135 million banked people in Nigeria, and just with population growth, we're going to get 3 million every year, add to that. But Nigeria has many problems. One of which is that people do not have access to credit, and there are no credit cards. And this makes it very difficult for people to actually operate. Just to give you an example, for every 1 ATM there is in Nigeria, we have 10 in the US. So access to cash is very difficult, and it creates financial stagnation. So Paga is solving this financial stagnation. We offer 3 categories of services across the ecosystem. Our platform as a service is where we offer our state-of-the-art infrastructure to other businesses to use and to embed into their own processes and into their operations. Our consumer direct app is a neobank and payments app, very similar to Cash App or PayPal, where consumers can use this to access financial services. And then we offer a retail business suite, which is an all-in-one business suite for retail businesses comparable to Square, and it's called Doroki. Now, one company alone cannot solve the financial access problem of Africa. And it takes collaboration across many companies, with each company doing their part very well, and everyone coming together to work towards a greater good. And this is the approach that we are taking at Paga. We strongly believe that when you collaborate, you lift all boats, not just our own boat. And this is the approach that we've taken. We've had many successes with collaborations, but we've also had our fair share of failures. And I'd like to take a minute to tell you about some of them. The first product we launched at Paga was ability to send money using your phone by SMS. And you typed send an amount, a phone number, and you sent it to a number. And you immediately get an automated phone call. And it says, "Hi, we're calling you from Paga. You're trying to confirm your transaction to send money to this amount and to this phone number." And I still remember the first time I ever did this on a live environment and it worked. I screamed. And I remember Jay and everyone like, what's wrong? They thought something was wrong because I was upstairs alone. And I ran downstairs and I was screaming, "It works, it works." Like, actually, Paga is working. But how did we do this? We were 4 people. We didn't have any connection to the telcos. How were we able to do this? We actually got these GSM modems and had 4 of them. And we had to plug them into the servers on you guys know the Nitel building in Marina, on the 14th floor of that building. And in these days, there was no VTU. So when you buy airtime, it was a scratch card, right? So to top this thing up, I'd have to go to that data center, unplug it, put the SIM card in my phone, and put the vouchers through. And this is how we sent and received SMSs on Paga for probably a year and a half, until we finally were able to collaborate with the mobile operators. And thank God that they did that. And so we collaborated with all 4 of the mobile operators. And then, our business, we're building out a financial agent network, and we said, how do we do this? And it was clear to us that if we could find a company that had an existing agent, a network, retail network, we could partner with them. And one day in the gym, I just happened to talk to someone I'd been bantering with for many months, and asked him what he did. And he said, "Oh, I'm the MD of MultiChoice." So I said, "Oh, we'd love to talk to you." So we had a conversation with MultiChoice, and it didn't go very well. In fact, we think they kicked us out of their office. So accelerate their businesses. And so we launched a new business, and we call this our platform as a service, or Paga as a service. And where we opened up our state-of-the-art infrastructure, access to our customers, access to every single thing we do, we make available to other companies. And today we have over 200 companies, and I'm proud to say many of them Endeavor companies, who are, if my slides would click. All right, over 200 companies who are building on our infrastructure, all the way from local to international companies. And these are just some of them. And they are now using our infrastructure to impact the lives of individuals and businesses across Nigeria. And our approach to this is working. We're a profitable company, and the FT selected Paga as one of the fastest growing companies twice in a row, 2023 and 2024. And we've processed nearly $40 billion in transactions since inception. As you can see on the chart on the left, most of that over the last 4 years. So we're really excited about what we're doing and how we're building. But getting here has not just been about collaborating with other people in the ecosystem. It's been a massive team effort as well. And so we have about 210 people across 9 countries. And so all of them, along with our investors who have given us the opportunity to do what we do, have really made this possible. So in closing, I would like to just summarize, actually before that, and personally for me, having a support system has really helped me. And it's something I wish I had earlier in my journey. And this is actually one of the other benefits of being in Endeavor. I have a peer group of 3 other fintech CEOs from all over the world, and we meet every month and have open, candid conversations. And this has really been very helpful to me. And I also have, since the pandemic, a coach, not Jose Mourinho, but let's call her Coach D. And I met with her yesterday, but Coach D is a professional coach, has been amazing, and has really helped me on my journey and really in everything I do. And I meet with her once a month, and I highly recommend, if you don't have a professional coach, to think about getting one. And so I'll just end by summarizing 3 key takeaways for me on my journey so far. And in terms of collaboration with people, 1 is partner with others to drive your focus and your scale. Win together. There are 2 quotes that really drive this home for me. 1 is looking at how Amazon actually thinks about this. So they say that Jeff Bezos says, if they see someone doing something better than they do it, they partner. Or maybe they acquire the person or the business. And the second quote actually comes from one of our investors, Ed Brakeman. He says, strategy is what you decide not to do in order to be able to do what you want to do. So strategy is what you decide not to do in order to be able to do what you want. And I think this really drives home the point about partnership and collaboration. The second is that you build trust through authenticity and transparency. Build trust through authenticity and transparency. And I think this has been very true for me in my journey with my co-founder, with my team. And I think Stephen Covey puts it really well. Without trust, you can't really collaborate, right? And it's trust that really transforms a group of people into a team. And then last but not the least is to seek support. Is to seek support and to be the support for others in the ecosystem. And guess what? Even the best athletes have a coach. Even also be a support for other people. So these are the 3 key lessons for my journey: to partner with others, to drive focus and scale, win together, to build trust through authenticity and transparency, and to seek support and to be support for others in the ecosystem. Now, as an ecosystem and as a country, I do not believe we can succeed unless we collaborate with others. Unless we open our minds, it takes an orientation of saying, how do I help others? How do we lift all tides together? And I really believe that we can do that. So I hope the conversations we'll have today would spark something in you to drive for even greater collaboration in our ecosystem. And if you happen to be interested in what we're doing around financial freedom, please come see me. Thank you.
Let's put our hands together for the founder and CEO of Paga, Tayo Oviosu. Thank you so very much, Tayo, for talking about the importance of collaboration. It's very interesting that our next Fireside Chat is focused on just that. I'm very, very excited for this next Fireside Chat because I believe that it's bringing two worlds together. Let's put our hands together for two amazing speakers. A man that goes by just two initials, GB, Benga Agbola, who is the co-founder and CEO of Flutterwave. Let's put our hands together for him as he makes his way to be the guest for the Fireside Chat. And this Fireside Chat will be led by none other than Adrian, who will be moderating this wonderful conversation. So Adrian Garcia Arinos, President of Endeavor, and Benga Agbola, CEO of Flutterwave. Over to you, gentlemen. Thank you.
Perfect. I'll stay with Mike for a second while we solve this. We left our mic somewhere else anyway. But since you couldn't get enough of me, another panel, but this time it's actually going to be GB speaking here. I'm a professional script breaker, so the questions that we have, I'm going to rearrange them. But the first thing I was thinking, Endeavor Nigeria was founded in 2018, and you became an Endeavor entrepreneur shortly after. I think that Tayo was the first, and you were the second. So I'm going to start the question with why? Why did you become an Endeavor entrepreneur? What led you to be part of the Endeavor network?
So like Tayo mentioned, right, in this ecosystem, it's really about support and collaboration. And I think Tayo has embodied exactly what that means in terms of partnering and collaborating. I recall Elo also coming to speak to me about Endeavor, and she explained how Endeavor can be a support system for both flutterwave and every community that's coming along. I recall Daring Endeavor coming to my office in Lekki, look at our financial model, asking tough questions, helping us to think through how we're going to grow and scale the business. And I think that was the tipping point for us about finding a partner that really understands our market. Endeavor being a locally present support system and investor was really a very big piece for us because they are here in Lagos. They understand the local market, the nuances, the context, the grapples we have to face with in building in this ecosystem and this emerging market. And those were the drivers for why Endeavor. So it was a no-brainer when you find a support infrastructure willing to actually support and give you the platform for scale, right? That was a very huge point in deciding yes or no. And I'm happy that today we went through that process from Endeavor to Tosin to Area. That support system is still very much present, and I think that's one of the biggest attractions for me for Endeavor.
Perfect. Well, now that we skipped that script, we can go back to our origin. But I think that everyone knows you, and everyone here knows Flutterwave. But just in case anyone doesn't, and by the way, what a journey since selection to now, and we can talk more about that. But you can tell us a bit more about Flutterwave and a bit more about how this whole thing started back in 2016, was it?
Right. So my background, software engineer background, worked in PayPal, a bunch of banks, from GT Bank to Access Bank to Sterling Bank, to starting a payment company that was acquired by a bank, then starting Flutterwave in 2016. The goal behind Flutterwave is really to democratize access to payment infrastructure across Africa. Africa, as you know, has a very advanced payment system. Everywhere I go to, I say this. There's M-Pesa in Kenya, there's NIPS in Nigeria, there's Paga, there's MTN mobile money in Ghana, there's Airtel money. There's so many amazing payment types that work really well in Africa. But what I saw back in 2016 was the lack of interoperability, so to say, right? If you recall back in the day, if you go to a retailer's shop in Lagos, you will see a POS for Value Card, a POS for MasterCard, a POS for Verve Card. And you have to have different devices for different card networks. So that was the problem we saw back then. and also how difficult it was for an average African business to access payment types that are global, access American Express, Discover, PayPal, international Visa and MasterCard. Those were the problems we saw back then. And we decided to build one API to connect all these payment types together and build that infrastructure. Obviously, it's a very tough challenge to take on. You have to try to go to every country, get licensed, get regulated. You have to build a network of merchants who are willing to use that platform. And that has been the journey we've been on for the past 8 years now. I recall I used to feel like a new guy when I met Tayo. Now I feel as old as Tayo in this game. It's really been 8 years doing this. So it's been been a very interesting journey. At the same time, rewarding. We've seen so many companies who are powering, scaling and growing. And in that sense, we see some of my early employees as well starting amazing companies, and that's really inspiring to see. Now we're also learning from them. And so it just creates a cycle of growth, which is really, really interesting. So flutterwave is just that payment infrastructure, helping businesses and enterprises to expand globally. Yeah.
Have you been able to, you were talking a bit about the employees that have left and started other companies. But in the end, what I was talking about before about the multiplier effect, you're a multiplier. This is the multiplier. This is what we want more of you in the ecosystems. Have you been following a lot of the entrepreneurs that have come out of your company? Have you been tracking them?
Oh yes, I'm always tracking them. Very proud of doing amazing work. Some of them are here today, I think. There's so many of them from Lemfi.
Last week we selected Lemfi in the double NISP, so one more.
I remember texting, I said, which one? Well done. Proud of Lemfi, there is SendSpring, there is VendHQ. There's so many of those guys building amazing companies, and it's just impressive to see.
The flutterwave mafia. It's interesting because we use this mafia term to describe, how other companies flourish from starting from. And Reid Hoffman, the founder of LinkedIn, is on our global board at Endeavor. And whenever we talk about the mafias, and it all started with the PayPal mafia. And whenever we speak about mafias, he always says, "Can we call it some other word? Can it be the PayPal gathering, or the PayPal boys, or whatever it is, but not the mafia?" But it is true that it does form this effect. Let's call it an effect. And flutterwave has definitely had that effect. You were speaking about feeling old and the aging and everything. And I think that one of the parts of aging is also the sector. I mean, fintech is a competitive sector, but also a highly regulated sector. Tell us a bit more about that. How is it working in that heavy regulated field, and how is working with regulators, not specifically in Nigeria, I think all over the world, in any country you go in the world, it's a challenge, no?
I think when you start in fintech, you start with the tech, then you go to the fin over time, right? You start with the APIs being very fancy, happy about that. Then you start moving to the core, regulated side of the business. Then you start calming down gradually, right? And, I recall a convo with Tayo. Sorry, Tayo, I'm putting on the spot. And it was like, JB, we need to go to Abuja and talk to our regulators. I was like, what's he talking about? Like, I have APIs to build here. And I just, but now I'm like, Tayo is so right. We have to obviously engage with our stakeholders. We have to ensure that, things are being done properly. We have to think long term over short term, And those are some of the things that we're also doing now as a company. And it's good to see, companies like Paga who have been here for 15 plus years and they're still thriving. And that gives you hope in this ecosystem that, okay, this can actually be here for a long time to scale. You see InterSwitch still thriving. And like, okay, there's a lot to learn from these guys. And I think that's really important. It's all about sustainability, profitability, the core things that matter. And that's basically what we're also gunning for right now as a company. And I think that's just how you scale, right? And obviously, Africa is not a market where, like Europe, I can get one license and I'm done, right? You literally have to go to every country, get regulated, get compliant, get everything done properly, and keep on doing that going forward. The cost of regulation is very high in this emerging market, as you probably know. I was having a chat with someone that 3 of my core big markets are on the FATF list, are on grey list, right? That impacts how I do business automatically. that impact what I can do in the market at scale. And those are just some of the emerging market issues that we face with. But that said, there are also the problems worth solving, right? When we solve them well, the impact is really huge and it's felt, right? I mean, for example, we recently launched American Express, and we see a lot of merchants that we're enabling who can now get paid by customers anywhere in the world, who can access cross-border payments quickly. That is so interesting to see when you see it happen in real life. Just like Tayo was screaming, yes, it worked. That's exactly how we feel every other day, seeing how what we're building works.
And looking, I mean, you've spoken about the continent. It's an exciting sector. But what excites you about the future, looking ahead in the next few years? What excites you about the opportunity in the sector?
I think it's still early days, which is funny to say. It's still very early days in the maturity of fintech in Africa. There's a lot to do. Obviously, as Africa gets better and the macro gets better, that will obviously impact payments. And it's very exciting to see. And again, payment is partnerships. For any payment systems you see out there, it's just stacks of partnerships, collaboration, bank networks, acquirers, card schemes, wallet operators, APMs, compliance infrastructure. Different things make up a payment system to work really well. So I think collaboration is the way to go, right? Partnering, working together, partnering for success together. You can compete and still keep it friendly. That's possible. You don't have to be caught with competition. And the market is huge enough for a lot of people, to be very honest. As long as you have a great product and it makes sense, I think you are going to have a great market penetration.
Speaking about partnerships, you've been partnering with some pretty big PayPal and Visa and others. How has that been, being able to partner with these big major brands?
I think we understand very, very deeply how you can build this thing without airports in this market. That's important for me. Folks like Tony, people that have actually built business like Herbert, those are people that you see that, yes, they've worked the work, actually. They know how hard it is to be in our continent, and those are people that I think I look up to, like, hey, if we can build to the level they've built to, we'll have done something impressive.
So lots of times the beauty of Endeavor is that it's a massive network that is all over the world, and we see how entrepreneurs from different sides of the world end up connecting and becoming peers because they're attacking very, very similar problems in markets, although their markets are worlds apart. Have you been able to build some of those connections at Endeavor with some of your peers that are in Indonesia or Latin America?
Oh, yes, I have. A couple of days ago, I was in a call with Gui of Chaka.com, Endeavor as well. The Endeavor network has been very huge for our expansion as well. When we went to Egypt, it was Endeavor that took us to Egypt. We just had a partner there to work with. It's been amazing. And beyond that, from Elo to Tosin to Ray. Tosin is on our board, by the way, former Endeavor CEO for Nigeria. You see that network growing and scaling. I've been able to build amazing friendship as well through Endeavor with people here, people on the network. And I think that is really incredible. And I think Endeavor is one of the closest knit group network I belong to right now, where I see entrepreneurs who are in my market, who have my problems. We can talk about the same issues because we're in the same market, and that is really important. I think the way Endeavor has localized yet globalized Endeavor is very interesting, where I can talk to local entrepreneurs in market, yet talk to people globally as well. That I think it's been a very key factor for success. I think it's been great. And I think we've seen that evolve as well over time. I've gone to become an entrepreneur, to become a board member, a mentor, and that I think is just impressive. And Endeavor is deliberately encouraging that to happen.
Well, Jimmy, I'm honored to have been able to speak with you here. I'm starstruck because you are the multiplier for us, and when we sit in our office in New York and we think about who those multipliers are in the different markets in which we operate, you definitely come up as one in this market. Congratulations on an amazing journey. Looking forward to so much more, and thanks for doing this.
Thank you for having me.
Please kindly come. We need to take some pictures. GB and Adrian, please kindly stay on stage. Don't run off so fast. Please kindly take a picture. Would the board of Endeavor like to join them for a picture? Please kindly take a picture. What a wonderful conversation that was. I think it's always interesting to hear about the origins of some of the companies that we all use and love. Ladies and gentlemen, let's put our hands together for Adrian Garcia and Benga Agbola, as well as the board members of Endeavor Nigeria. Thank you very much. Another round of applause, please. So we're getting ready for our first panel session of the day. Very exciting panel session, which is focused on beyond competition, how to expand the pie for everyone. So if you can see, there's a lot of themes around competition, collaboration, and I guess collaboration over competition. This amazing panel session will be moderated by an amazing journalist by the name of Tage Kene Okafor. Please make your way to the stage. He's a technology journalist who covers the intersection of startups and venture capital, as well as in emerging markets, particularly in Africa and the Middle East. And he works for various platforms, including TechCrunch and TechPoint Africa. So Kene Okafor, let's please put our hands together for him as he makes his way to the stage. He will be joined by Razak Ahmed, who is the co-founder and CEO of Carrywise, another leading fintech platform making financial services more accessible. Let's put our hands together for Razak Ahmed, who is the CEO of Carrywise. Kola Aina is also joining us. He's a prominent Nigerian entrepreneur and investor known for his influential role in the African tech ecosystem. He is the managing partner and co-founder of Ventures platform. Let's put our hands together for Kola Aina as he makes his way to the stage. And last but certainly not least, Mr. Chiemeka, who is the CEO of the Nigerian Exchange Limited, NGX, which is a subsidiary of the Nigerian Exchange Group. Let's put our hands together for Jude Chiemeka. Thank you. All right, so we have 3 speakers today. Do enjoy. Thank you. We will be, also I'd like to invite Yemi Kerry to join us for this panel session, the only woman on this panel. So let's put a round of applause for her. Yemi Kerry, the CEO of Hekabella and co-founder of Rising. Thank you.
Go to the other side. Good morning, everyone. Can you hear me? Can you hear me? I need a response, please. Thank you very much. So my name is Tage Kene Okafor. I'm a tech reporter for TechCrunch, and with me I have amazing panelists, Madam Yemi Kerry, Mr. Razak, and Mr. Jude. Please, a round of applause for them. So today we'll be talking about collaboration, competition, and increasing the pie for everyone to participate. Over the last 2 sessions we've had with Adrian and GB, and also other sessions, we've heard about collaboration within the tech ecosystem. We've heard about competition, and also we've heard about the population of the Nigerian youth, and also Nigeria as a whole. And one thing we know amongst fintechs, when you look at a typical fintech pitch deck, you see the Nigerian target market, 200 million people, right? But we all know that, fintechs are not serving 200 million people. It's usually between 5 to 10 or 20 at best people. And we know that financial inclusion has also made significant progress over the last couple of years. So the topic for today will be about non-consumption, and that's essentially increasing the pie for, like our topic today, beyond competition, how to expand the pie for everyone. So, we can have more consumers participating in the economy. So we will go to our panelists and have each and every one of them talk about their idea of non-consumption. We can start with you.
Okay, good morning, ladies and gentlemen. So I think that from an investor standpoint, we see a lot of decks. And when you see those decks, people tell you about their TAM and their SAM and all of those beautiful things in terms of justifying their numbers. But what they don't tell you is that group of consumers that are not being addressed, that are unable to or are unwilling to use or purchase any form of your product or service. And those are those that are referred to as non-consumers. And those non-consumers are unwilling and unable basically because of different barriers or factors, cost, affordability, complexity, infrastructure, and really those are those that are referred to as non-consumers.
Razak, do you want to expatiate on how that affects non-consumption affects the consumer market, having being one of the CEOs of one of Nigeria's main fintechs?
Yeah, thank you. Thank you. I think I can pass this across with a bit of a story. I remember when we had the initial idea of starting out Carrywise. We're still at the very early stage at that point, and to be honest, the future wasn't that clear, just like the case with any other entrepreneur. And I remember vividly I had a discussion with someone, a senior executive in one of the Nigerian banks, about what we're trying to do at that point. And the discussion centered around what was our target market, right? And we're so confident, and we told him we're democratizing retail wealth management. We're trying to make wealth management available for the retail man, the man on the street. And he mentioned something that's stuck with me since then. That what wealth are you managing for these people? And to be honest, at that point, it created a doubt that if you're trying to build a wealth management platform, the primary consideration usually is there has to be a wealth to be managed in the first instance. And that means that you're focusing on the top 1%, the top 2%, those who actually have the wealth for you to manage. But what we didn't consider then, or what the executive wasn't considering then, was the non-consumer, those who are currently not having access to wealth management, primarily because of the nature of wealth management service at that point. And the reason was very simple. The model of management service, as we know it in Nigeria and in other parts of the world, is primarily get few people, high net worth individuals, super rich people, and manage their wealth for them. But bringing that down to the retail man on the street, who probably has about $1,000 in net worth, doesn't make sense to a fund manager or a portfolio manager to do. It won't worth their while. So the point is, for the non-consumers, their behaviors are different from the regular or core consumers of a particular product. And the model of servicing them has to be different as well. If we have a retail customer who is having access to wealth management service, it will be uneconomical to have a portfolio manager dedicated to that retail customer, for example, because it will make the unit economics working. So the point is, for the non-consumers, the primary objective is they need the service, but they do not have the capacity to afford the service. So there is lack of affordability, and sometimes there's also lack of access. So to service that non-consumer segment, the model of service has to be different. And it has to be cheap to the extent that you're bringing a good number of them on board, while making sure that the marginal cost of serving them is extremely, extremely cheap. And that is what can make it economically viable to serve them. So in the Nigerian market, for example, for a good number of luxury products or products that are primarily made for the top 1%, there should be a version for the retail man. An average man on the street deserves to have insurance, just like the richest man in Nigeria, for example. The average man on the street deserves access to investment opportunity, just like the richest man in Nigeria. But the nature of investment will now be different, and how they get served will be different. And that is the crux between having the consumer segment in the Nigerian markets and the non-consumer segment. So the non-consumer segment is huge, but the critical thing is the way to serve them has to be different from the way the core segment of the market is being served.
Do you want to add to that? From your point of view, how does non-consumption serve as an overlooked opportunity for businesses and startups to grow the customer base?
All right, thank you very much. I hope you can hear me. First, let me start by thanking Endeavor for inviting the exchange to be part of this conference. Bolaji Balogun is a critical stakeholder in our capital markets, and we're quite happy to be part of this event. But from what I have heard so far, it's really a time well spent, given that non-consumption is a big problem that the entire economy is grappling with. So if you look at businesses today, you probably say it's a monopoly of some sort. Even starting with the financial markets, if you think about the population, over 200 million people, but less than 60 million actually have BVN, so the rest are financially excluded from the markets. And so if you think about startups that are looking to engage, it becomes really very critical to even look at how they can innovate around the three critical areas. When you talk about sustaining innovation, or you're talking about innovating for efficiency, or even creating new markets. So we think that because of this non-consumption pattern that we see, it provides a huge opportunities for startups. So rather than just be focusing on trying to gain market share from an already existing space, it does make a lot of sense to consider creating new markets. At Exchange, we are a platform provider, and part of the things that we have done, recognizing even the tech ecosystem, is to create a new market, a new opportunity for tech companies to be able to access the market away from the traditional companies' requirement, because we do recognize what is involved in creating an ecosystem for the tech space. So today we have a technology board that houses fintech companies and big tech companies, and the idea is to move them away from the traditional sectors so that they're able to create new markets, innovate, and expand already existing markets. So in a nutshell, I think that non-consumption offers huge opportunities for startups. So they just have to think about how to expand already established businesses. And I believe that with the right innovation, we should be able to get them to get more people involved in whatever sector they're looking to scale. Thank you.
All right, thanks for that. And one thing you've all mentioned here is increasing access and also barriers to affording the services, right? And over the years, we've seen examples of that with M-Pesa, right, with mobile money, and also, since we're talking about financial services here, recently, MoneyPoint, OPay copying the model, and agent banking, in Nigeria, right, also diversifying financial access. And now financial inclusion in Nigeria is about around 60%, right? It's a long way from where we were like 4 or 5 years ago. However, there is still, there's still a long way to go, right? So are there practical examples for, fintechs and also non-fintechs, right, to carry out, right, to include more people to access the services? So what I ask is, we've seen progress over the years, but is it enough? And okay, so M-Pesa, for instance, started with USSD and now moved to mobile apps, right? And we have mobile apps as the de facto products, right, for any services we want to launch. So are there ways, for instance, you can, with digital bank, with agency banking, for instance, you don't need a mobile app to access it, to access financial services, right? So are there other methods, right, where, you know, innovation can be carried out without using the mobile app, for instance, or just like maybe using the mobile apps, but also lowering the barrier to entry via cost? Do you want to take that, Razak?
Yeah. So financial inclusion has been a topical issue, not just for the regulators, but also for the government and other stakeholders generally. How do we include more people into the financial ecosystem? And the objective is pretty simple. You can't create prosperity without making people have access to finance. Finance in all its various shapes, from lending to wealth management to payments. They are the cornerstone of prosperity generally. We've seen some growth in Nigeria with respect to having more people being included within the financial ecosystem. But objectively speaking, that growth hasn't been as strong as we had expected, or as the regulators will even want it to be. That said, I think there are so many other factors responsible for the slow growth. In addition to enabling regulatory environments, which ordinarily should foster the development of financial infrastructure, enabling environments to enable innovators build financial infrastructure that can bring more people into the financial ecosystem. There are other macroeconomic factors, right? So for example, within the Nigerian ecosystem today, I doubt any new innovation will ride on the development of branch network as the basis to enhance financial inclusion. But 20 years ago, that was a strategy. But today, the strategy is quite different. And the reason why the strategy is different today is because there has been development of certain infrastructure. Internet access is a lot higher now than it was 20 years ago. And today you have a lot more people making use of smartphones than they were 20 years ago. So the implication is that branch networks are being miniaturized into smartphones. So you can basically perform everything you can do within a branch of a bank or any financial institution on a smartphone. So, but as a financial market stakeholder, you can't buy smartphones for everyone, right? So there has to be some form of development, some form of economic empowerment that enable people have the required purchasing power to have access to this technology before you can actually serve them. So there is the policy drawbacks in terms of how quickly are we growing the economy to enable a lot more people have the purchasing power to have access to this technology that can enable innovators have access to these individuals so they can serve them better over time. You can't leapfrog that, and that is the reality. So the growth we've seen is on the back of the appreciable infrastructural successes that we've seen, from internet access to mobile telephony, but there's still a lot more that needs to be done in order for us to include a lot more people into the financial service ecosystem. I'll also speak on, say, for example, capital, right? If we're talking about lending or access to credit in this part of the world, we all know the data is there. Lending is underpenetrated, right? Credit is largely at very surface level. But the truth is capital cheap right now in order to enable significant number of people have access to credit? Of course, we've seen growth in the number of lenders, online lenders, advancing credit to the retail market, but at what cost? Is capital cheap today to enable the retail man have access to credit in order to increase their personal prosperity? How much are they paying in interest costs? Is it actually net positive to them, for example? But as a business owner, of course, if you have access to capital, there's also that opportunity cost. there is a capital cost that you have to bear. Does that mean when you have access to that capital because you want to be charitable or you want a lot more people to have access to credit, then you provide that credit to them at a very low interest rate? No, there is a risk element involved. So there is a lot involved in all of these dynamics, including the economic factors, the policies that can enable the leapfrog that we all need to enable a lot more people come into the financial ecosystem and to be included financially. But so far, we've recorded some successes, but I think we still have miles and miles to cover.
Thanks for that. Okay.
If I may add a little bit to that, I think there are certain elements that we need to deal with, right? And the practicality of it. So we were talking about financial inclusion, or you're talking about the non-consumers. And you have already mentioned the cost of acquisition, right? But when you have a group or a community of people that are really not aware about the value or the impact of what you are providing to them, then they're at a loss. Now, you've also talked about the painstaking in terms of putting capital in acquisition, right? But let me give a practical example. We're doing a lot of data gathering for a company for financial inclusion. And in gathering that data, in some areas, we found out that it was not only about them not understanding why we're collecting the data or the benefits of having access to finance. It was more so as their beliefs and what they understand, that why are you collecting my name? It had to take a combination of one of the most respected people in the community, as well as somebody that had reciprocity of knowledge, one of the eldest people in the village, for us to be able to collect simple data. Because when you ask the girl, 13, 14 years old, what is your first name? She says Molika. And what is your surname? Who is your father? She says Baba Beji, right? And there you cannot capture Baba Beji, and she doesn't even know her age. And there you have to go to the community and ask for the person that knows the history of the people in the community. So it goes way beyond, and it's a very painstaking process that you have to pass through for you to be able to gather enough data and also be able to communicate the value of what you are bringing to them for you to pull them into taking on whatever you're giving to them as non-consumers. I just wanted to achieve that.
Thanks for adding to that. And I mean, from what you've said about, so boils down to education, right? And also government policies that can enhance people to tap into the economy, right? But piggyback of what you mentioned earlier, Razak, about, you know, how like businesses are expected, right, to make non-consumers consumers, right? But how do you see that playing out when they have to think about profitability, right? And Jude, I think I'll throw this question to you. So, like, as you know, running Nigeria Exchange Limited, how do you feel businesses should pursue the fact that, okay, they have to provide services, right, to non-consumers to be part of the consumer market, but also like targeting profitability for the investors and also for the business?
All right. So if we look at just from the perspective of the job to be done, so what is your objective? So why are people not using already established products? And how do you then...
What kind of innovations do you see being, like, you know, again, building products in the financial space, Razak? What innovations? Because you just mentioned a good point, Jude, about, I think everyone has mentioned here purchasing power. And for instance, the GDP per capita a decade ago was around 2,000 plus. Now it's 1,000 plus, right? That's almost 100%, or if I'm not mistaken, decrease. So how fast can innovation meet up to, you know, a dwindling purchasing power of like the mass market, right? Because in as much as we're providing these services, it seems like we're still stuck in, like where we were 10 years ago, right? And to Jude's point, we need more companies to list on the markets, right? So people can also, buy their stocks and see the value that these companies are providing. So I think my question is, what kind of innovations do you see that can bridge the gap faster between the purchasing power of the market, right, and also just innovation in general?
Okay, yeah, thanks for that. I think you mentioned something which is quite critical about trying to innovate around what interests people. And one thing we've seen about the non-consumption segment of the Nigerian market, especially as it relates to the financial service space, is that we have the demographic advantage in the country. A lot of young people, a lot of people have mentioned that, average age 21, 22 years, or 19 years even, which is quite remarkable. And we've also seen certain behaviors exhibited by these demographic segments. A lot of them are very sociable. A lot of them like against the trend. We can't stop people from watching football. We can't stop people from betting because they can easily bet. They can easily bet from their mobile phone. Even the banks enable it. I'm not saying it's a bad business, but it's a business. They enable you to send money from your bank account to the betting account. So whether that is a good financial behavior or not is a different discussion. But the most important thing is if you want to cultivate good investment behavior in people, there has to be a way you embed your innovation into the behavior that they find more comfortable. And I'll give an example of what we've done, for example, in Carrywise to latch on that kind of innovation. So we have a product called Savings Goal. Nigerians are very passionate about football. They love football. They watch EPL, they watch La Liga every weekend. It is very difficult for you to have a weekend in Nigeria without a debate in terms of EPL. And what we've done is to build a product that enables people save and invest anytime their favorite football team scores a goal. That is a way to encourage people to cultivate positive investment behavior. And I think we need to have a lot more of this in order to change the tide, to turn the tide from people cultivating behavior that are somewhat negative to them in the long run and turning the tide towards behaviors that are positive to them in the long run. So we need a lot more of those kind of innovations. People are passionate and you can't do anything about the passion. So all you have to do is to key into that passion to enable them get some positive things out of it.
Do you want to add to that, Madam Yami? Are you seeing innovations coming in play from the startups Rising Tide is backing?
So for many startups to be able to, they have to sort of see how they can create issues. You've talked about affordability. There is also the issue of infrastructure. There is knowledge awareness. There's beliefs and all of those things. And really to be able to create them, how you can make something more convenient, right? But I heard a saying last week that innovation is the next level of customer convenience. And what customers are really looking at for now is convenience. And so how do you create something that will pull those non-consumers into your own market demography? And that is really where the element of innovation comes from for all of the founders and startups.
All right. Thanks for that. Jude, I want to ask, being in the middle of the private and the public market, are you seeing some form of collaboration between, corporations and startups, right, in addressing this non-consumption issue that we have in the country? Because I feel, corporations have, money to spend that startups don't, right? And I think that can go a long way in bringing non-consumers to the consumer market. Because when you look at it, fintechs are going against banks, and for the most part of it, banks are, for lack of a better word, they don't really, care about, people that don't have money per se. But like, startups do, and they go after them. So are you seeing some kind of collaboration between, the two different kind of companies?
All right, thanks. So there's a lot of collaboration, and if you think about what startups can actually integrate from that perspective, because one, they will leverage on the structure already established. Earlier on, they talked about regulation. Regulation is a shoot of some sort to the established businesses to ensure that they're able to bring in more customers. And I think that's really the point. The big corporations will really focus on sustaining innovation that they already have. At best, they will try to do efficiency innovation around their operations and how they operate. But the startups really have the opportunity to leverage those corporations to create new markets. That's really where the task lies. And that is how I think they can collaborate. Once they are able to do that, leveraging on already established infrastructure of the big corporations, then the consumer, they are closer to the consumer, will then be able to utilize what products that they are providing or service that they are providing, because they are closer to the consumer. And I think that is where the collaboration really lies, the ability to have a focused attention on the customer, because the customer is constantly seeking for new experiences, new ways to get that job that they really want to be done. And as a startup, that should be the primary concern as to what is it that the customer really wants to be done, and getting it done for them in a very easy, affordable, but beyond that, satisfying manner. I mean, if you went to a bank today to get a loan, the whole process is very chaotic, right? But if you're going through an app provider that provides credit, and you can do that from the comfort of your home through your mobile phone, then it becomes easier for you to utilize credit. And I think that is what startups need to start focusing on, the ability to provide service products to the consumer at an affordable, fast, and easy to use approach.
You talked about regulation, and I think my next question will revolve around, if you think there are frameworks that, maybe you can advise governmental agencies here, if they are, right, on policies they should enact, right, to make, to address the non-consumption issue that we have. And Jude mentioned, banks having a place in creating sustainable and efficient markets, efficient innovation, right? While startups can create markets, right? And I don't know if you've read the thesis by Clayton Christensen and Efosa, right, about market creating innovation. And most of the key points that they made boil down to large corporations creating or manufacturing something that changed the whole nation. I don't think we've had such creations in this country. Could that also be the fact that we are not a producing or manufacturing company like the likes of maybe Japan, right, or China? These were emerging markets back in the 80s, same as we were, and now they are like way ahead of us. So could policies also address the fact that maybe manufacturing can become easier to make manufacturing cheap or production cheap, right? So people can tap into that and provide cheaper services to non-consumers.
Yeah. So I will address two items there, riding on what Jude said earlier and then the regulation part. I think first and foremost, regulation can be a very strong enabler, it can unlock an entire industry. It can either unlock or kill an entire industry, right? And a key example of that is, say, the Nigerian pension industry. I think the successes recorded today are partly driven by the regulation that came up in 2005, 2006. And we've seen how that sector has changed dramatically. Of course, you don't want to imagine what that industry will look like today without the Pension Act of 2005 or 2006. So that's a case study of how regulation can unlock significant value for the entire ecosystem and for the entire country. Even at that, we still have a long way to go because we still have 10, 12 million people that are within the pension industry right now when we have about 60, 70 million active workforce. So we still have a long way to go. That said, in terms of how collaboration can also unlock significant value, and I'll give an example of how we started, for example, right? We started out to offer financial services, but of course we didn't have a license, which is typical of most companies. But the structure of
when you look at the cryptocurrency and also even
applause for our wonderful moderator as well, please. So we have time for 2 questions. Do I have questions in the audience? We have a gentleman over there. Can the ushers please go to him behind the lady in the pink? And please hand him a mic. Please kindly introduce yourself and keep your question short. Do we have another question in the audience? So we have just one question. To the gentleman behind the lady in the pink. Yep. Right there. Yes, right there. I can just give you my mic.
Without compromising their own growth or independence. Then the second question is, in industries driven by competition, what cultural or organizational shifts are necessary to embrace a mindset of expanding the pie rather than focusing solely on market share? Thank you.
Great questions.
Maybe or service. You look for a company that has the hardware that you can collaborate with in order to expand your footprint. I think that would not compromise your own product. Maybe you want to take the second question.
That you can create. In that kind of scenario, it's pretty much simple and straightforward. In that kind of scenario, it's pretty much simple and straightforward. But behind that, there has to be serious trust building process where you are being trusted and the competitor is also trusting you. But another framework to use in order to establish whether you need to collaborate or not is to consider if you will compete, if competing with your other market players will actually enable you build a stronger market or you compete yourself out of the entire market. In that scenario, it is very simple for you to just collaborate so that the summation of, or the sum of the part in that case will be much greater than the whole. The last part is, if the collaboration opportunity is only enabling your product to be consumed by the consumers of the telcos, or you are enabling your own consumers to consume the product of the telcos. So collaboration is something that we need to have an open mind to, but also have it at the back of our mind that when it is time to compete, then you have to compete as needed.
All right, if I can speak to the first question, I'll just reference what Mr. Bolaji said around the 2 C's for startups. It's very critical. So if you have the competencies and you have the credibility. So the other element is being close to the customer. So if you look at it from the ESG principle, the environmental implication of that business, the social impact, and the governance structure. Those are the areas that I think as a startup you really need to focus on, because that's the value you will bring to the big establishments. And so it becomes easier because you have the competencies, they will listen to you, you have the credibility, then they will, we had it here, then they will give you a try. If you think about all the big names that we hear of today, it just took somebody to take a bet on them because of the competencies that they saw. So it's very important to really be on top of your game as a startup. You really have to demonstrate the understanding, really that understanding of the ESG, the environment, the governance structure, but more importantly, the impact, especially since you're trying to create new markets and want to bring in new consumers on board. Thank you.
Thank you very much. Let's put our hands together for this amazing panel. Our amazing moderator, Tage Kenny Okafo, Mr. Jude Chiemeka, Ms. Yemi Kerry, and Mr. Razak Ahmed. We will be taking pictures, so please, panelists, stay on stage. Beyond competition, how to expand the pie for everyone. A very interesting panel session indeed. I am going to ask the Endeavor trio to please join this panel session on stage. So Adrian, Michelle, and Ire, if you're here, please kindly join them on stage. And if we could please have the Endeavor board members, please join this panel session on stage. So Endeavor board members, please make your way on stage to take a picture. Thank you. Please kindly stay. There seems to be a lot of talk about collaboration and competition. I think that's the buzzword for catalyzing conversations, or rather, collaboration over competition. Let's put our hands together for that panel. Thank you very much. I wonder if, I know that we've been sitting quite a bit, so I don't know if the audience wants to stand up a little bit, stretch yourselves a little bit. It's not too healthy to be sitting down for so long. So please do take a moment to stretch around as we continue the rest of the program. So my time has come to an end as the co-host of this event. It's been great taking you through the morning period. Please help me in welcoming my media colleague, an amazing multi-award-winning journalist by the name of Blessings Mosungu. She currently works at News Central and is somebody who is extremely talented. So Blessings, it's sad that we couldn't host together, but I'm glad to be doing this with you.
I'm so glad to be doing this with you. And it's been a very, very beautiful event filled with insightful conversations. And
Absolutely.
Thank you for that beautiful introduction, by the way.
Absolutely. So what's been your favorite part so far?
Well, I think for me, if there's anything that is a take-home is one of the things that the speaker said, because we understand that, Endeavor has built and is still building a network of strong entrepreneurs, businessmen and women. So one of the speakers did say that if you want to go fast, go alone, but if you want to go far, you have to go with a team. And he went on to emphasize the importance of moving with a team that you actually trust, because trust is like the catalyst for collaboration. And you did say that the buzzword was collaboration and competition. So I absolutely have enjoyed every session.
I'm so glad. Ladies and gentlemen, please kindly put your hands together for Blessings Mosungu, who will take you through the rest of the afternoon.
Thank you so much, Lily. And also put your hands together for my co-host and an award-winning media practitioner, media professional, Lily Balde Cameron. She has carried this event effortlessly. Once again, please put your hands together for Lily Balde Cameron. Thank you, Lily, once again for a very beautiful introduction and for carrying us through the event effortlessly. Honorable guests and distinguished ladies and gentlemen, I'd like for you to please get settled in. I can see that the networking is going on and it's a beautiful one. Do well to meet somebody, ask someone's name, but please, we have a few seconds to do that because we're about to go into the next set of sessions that we have. like I said earlier, it's been filled with insightful conversations. We've learned a lot. We've talked about networking. We've talked about collaboration and the importance of it. And Endeavor is strongly focused on building a strong network of individuals. And that is what we're doing here today. So it's important to network. It's important to get to know each other. And it's also important to understand the catalyst of building a strong business, of building strong network of individuals, of building a strong connection with each other. So once again, ladies and gentlemen, I would like to crave your indulgence. I can see that the networking is going on. It's beautiful, it's encouraging, but please, we have few seconds to get settled in so that we can continue. Ladies and gentlemen, please, if you're outside the hall in the cocktail area, would like to ask you to come inside because the program is about to continue. So if you're outside in the cocktail area, please find your way inside. And of course, for those of us networking, like I said, it's beautiful, but we have limited time to do so. So please get seated as we continue. Thank you so much as you cooperate. Ladies and gentlemen, please let's start winding down with the networking session so we can have our seats. We still have panel discussions to come. We still have fireside chats. And of course, there is a networking session that is dedicated just to get to meet each other. So we'll still have enough time to do that. There's more time towards the end of the program. And of course, there's the master classes that I'm sure a lot of people have been waiting for. So right about now, I'd like to ask that we kindly take our seat as we continue with the program. Honorable guests and distinguished ladies and gentlemen, as I await everyone settling down, I'd like to once again introduce myself. My name is Blessings Mosugu, and I'll be picking up from where Lele Balde Cameron left off. Once again, Lele is my co-host, and she's done a fantastic job carrying us through the program from morning up until this moment, and I'll be picking up from there, taking us through the rest of the items on the agenda that are still to come. Like I mentioned, we've got fireside chats, the second one. We've also got the second panel session, and of course there are master classes, and then there is ample time to network after the event. So please, once again, let's kindly get settled in so we can continue. The speakers for the next session are ready and waiting for everyone to settle in. So please, I'd like to crave your indulgence. do us the honors of getting settled as we get on with the program. Ladies and gentlemen, once again, this is Catalysing Conversations 2024, hashtag CC 2024, put together by the Endeavor team. And this is set to inspire and empower entrepreneurs, investors, and industry leaders. And like I mentioned earlier, Endeavor has built and is still building a lot of, business entrepreneurs, business individuals that are making the mark in several industries. So this is an amazing place to be. This is an amazing platform, and we want to say a huge thank you to Endeavor for what they're doing. This is the 6th edition, and it's been beautiful all the way. And in case you didn't hear me earlier, I would like to once again introduce myself. My name is Blessings Musugu, and I'll be taking us through the rest of the program. So please would like to crave your indulgence, get settled in, because the next session is about to get started. Would also like to recognize our virtual and in-person guests, especially the virtual guests. We see you and we appreciate your patience and your time. We know that you're there watching, and do not hesitate to ask whatever questions you have, and then we'll definitely answer. So while everyone is getting settled in, I would have asked to get to know everyone vicariously. But very quickly, I would just like to walk up to certain individuals and find out what their names are and what they do. So if I come to you, it's because I want to know you, I want to know what you do, I want to know who you are. Like I said, my name is Blessings Musugu. I'm a broadcast journalist and an events compere. So please, if I come to you with the mic, do me the honors of telling me your name and what you do. Hello, sir. Good morning. What's your name and what do you do?
Good morning. My name is IK. I head the mutual funds team at Chapel Hill, Denham.
Thank you so much, IK, and it's a pleasure to meet you. Good morning, ma'am. What do you do? And what's your name?
Hi, my name is Lola, co-founder, chief products officer at Valmaron.
Great to meet you, Lola. You look amazing. I love the pink. Hello, good morning. What's your name and what do you do?
Hi, my name is Greg. I'm the founder of a company called Africa Works.
Amazing. Nice to meet you, Greg. Thank you for being here. Ladies and gentlemen, please, I'd like to ask for us to get settled in. We'll be starting in about 60 seconds. Please, let's get settled in. Good morning, ma'am. What's your name and what do you do?
My name is Folashade. I work with Resilience 17 as a finance lead and investment.
Great. It's nice to meet you, Folashade. Good morning, sir. What's your name? What do you do?
My name is Toba Adenaike, founder at Medical Solar Storage.
Great. Nice to meet you. All right, ladies and gentlemen, I'd like to ask that everyone be seated now. We're about to get started with the next session, which is a fireside chat. I'd also like to ask that if you're in the coffee area, it's time to come inside and get settled in. We'll be starting with the fireside chat very shortly, and I would like for everyone to be in the hall in attendance. So please, if you're outside in the coffee area, this is your cue to come into the hall and get seated. I saw a lot of networking going on, and I'm sure that a lot of people have met new people. You know, I always say to people that my favorite part of every event is the networking aspect, because you never know, your next potential client, your next potential business partner might be sitting close to you. So I'm glad that everyone got the chance to meet somebody new, talk to somebody new, get to know somebody. I did as well, because I just asked certain people. And in case you didn't get the opportunity, I'll just like to say that there is ample time towards the end of the program to get to know each other, to network, and then, you know, just find out something new about someone. Honorable guests, distinguished ladies and gentlemen, we're about to go to the next session now, and without wasting time, we'll be moving on to the Fireside Chat. And I'm about to bring up the amazing set of panelists that we'll be having for this conversation. Moving to the program, a segment that I am particularly excited about. And if you ask me why I'm excited about it, it's because it has to do with failure. Now, a lot of people do not like to hear about failure, but when I got a different perspective about failure, I started embracing it. Now, I'm not saying that failure is the best thing that can happen to mankind, but perspectives matter. The reason I'm talking about this is because the next session is a fireside chat that is a discussion titled Failing Forward, Transforming Setbacks into Success. Failing forward, transforming setbacks into success. And I'm excited because it takes critical thinking for you to understand that some certain kind of failure is actually opportunity in disguise. So, like I said, perspective about failure is everything. If you see failure as an opportunity to grow, then you would grow. But if you see failure as a setback, then it is a setback. So, ladies and gentlemen, I would like to ask that there be quiet in the room, and that if you're still standing, please settle down. We're about to go to the fireside chat, and I do not think that our panelists will appreciate people still standing and bantering. Ladies and gentlemen, we have just 3 more seconds before I bring up the panelists. Please, I'd like to crave your indulgence to get settled and focus your attention on the stage. Ladies and gentlemen, to do justice to this topic are the people that I'll be bringing up shortly. First off is the moderator for this fireside chat, and that is none other than the founder and the publisher of Communique, David Adeleke. So please, with a resounding applause, join me as I welcome David Adeleke to join me on stage for the fireside chat. David Adeleke will be moderating this session. Welcome, sir. The second panelist that will be joining me on stage is the co-CEO, Eyowo, and the CEO and co-founder of Softcom. Ladies and gentlemen, join me as I welcome Yomi Adedeji to the stage. A resounding applause, please. And last but definitely not the least, ladies and gentlemen, is the founder and the president of Selu Group, none other than Peter Ujonjo. With a resounding applause, please welcome Peter Ujonjo. Now I'll be handing over to David Adeleke as he moderates the session titled Failing Forward, Transforming Setbacks into Success.
Thank you very much. Good afternoon, everyone. How are we doing? How are we doing? Wow, cold crowd, not good. All right, so this afternoon we're going to talk a little bit about failure, lessons, and like I said, we want to have a candid conversation to give the audience perspective around this subject that many people consider taboo because we don't talk about it enough, and we often don't have we don't ask the right questions, and we don't have the right conversations around it. But just before we start, I want you both to introduce yourselves, and by way of introduction, give them context for why you are sitting in front of them talking about failing forward. Yomi, let's start with you. Yeah, just move it.
All right. Okay. My name is Yomi Adedeji. I'm the founder of Softcom and the co-CEO of AO. I think I'm here because I've had my first challenges recently. We had a license revoked by Central Bank. and looking forward to sharing our experience with everyone and hoping that someone can learn something from it. I'm also looking forward to obviously learning from David, Peter, and everyone in the room. It's nice to see everyone, and I look forward to the discussion. Yeah.
All right, thank you. Peter.
Yeah.
So, good morning, everyone. My name is Peter Njonjo, and I used to live in Lagos.
Peter.
It's great to... Oh, sorry, let me just... Can you hear me now?
Yes.
Great. So, I used to live in Lagos, so it's great to be back home. And from a career standpoint, I worked with Coca-Cola for 21 years. And at some point, I started a company by the name of Twiga Foods, which is why I wanted to share with you my journey, getting up until this point. And right now, I'm running a business by the name of Celu, and we're focused on large-scale commercial farming. And I'll share with you a little bit in terms of our journey with Twiga, what we learned, and how that has helped us today. So great to be here.
Thank you very much. And Peter, I want to start with you. So, a few people might not know, you started a company, you co-founded a company, and then you had to leave for some reasons. And for many people, that could be considered the end of the world. I started a company and then I had to leave for different reasons. But for you, it's giving you some perspective, and then you've gone on to start your own, another organization. So just talk to us a little bit about the experience that you had, you know, the challenges that you faced with Twiga, some of the circumstances around your exit, because, you know, some people read these things in the news, you experienced it. So talk to us about that.
No, thank you so much, David. So, Twiga, for those of you who might not have known about or do not know about the business, we're a B2B e-commerce business. So our challenge, the challenge that we're trying to fix in the market was around the inefficiency of retail. And because this is something that constitutes a significant part of the economy, this is a sector that doesn't have a lot of infrastructure. So it involves both solving the infrastructure challenge while solving the challenge around how food moves from farmers to retailers. As a sector, it's a sector that raised a lot of capital. In Kenya, between 2017 and 2022, as an industry, we raised about $600 million. So it is a sector that drew in a lot of capital because of the opportunity it presented. So when I was pushing on with Twiga, we were in the middle of our Series D. As I mentioned, you know, we need to raise a lot of capital. And this Series D happened right at the time that the US Federal Reserve increased their interest rates in March of 2022. I don't know whether many of you remember that. For some of us who are in the industry, it was a watershed moment. It was a watershed moment because between 2017 and 2022, there was a lot of capital that was available for some of these sectors because three things were happening in the world. One is that we had very low interest rates. Second, there was very low growth rates in the world. And the third, inflation was very low. And that meant that there was little opportunities in the developed markets to invest or deploy capital. So that money started making its way to riskier markets like Africa. And that's how we managed to attract that amount of funding. But when the US increased their interest rates, all of a sudden, this money was wiped out. So from a market that was awash with cash for entrepreneurs, it changed to a market that did not have the resources anymore. And that transition meant that we had to look at the business and ask ourselves, what are we going to do different to ensure that we can survive? Now, but this change not only impacted entrepreneurs, it also impacted the investors. So you can imagine now you're going back to your IC and there's been issues around maybe down rounds or devaluation of some of the assets that you've invested in. And there's a lot of disillusion that's also happening in the investor base. And that disillusion then brought a lot of dissonance into the business. So when I sat down in Twiga, so I used to have a very aligned shareholder base. And what you have now, the shareholder base starts pulling in different directions. Because each shareholder now is facing different circumstances because of the changes that we're seeing in the market. While at the same time, fundraising then gets tougher and tougher and tougher. And during that period, it meant that we needed to start looking at non-traditional opportunities. In the case of Twiga, we had to start looking at things like farming. How do you backward integrate and expand your margins? But now you can imagine talking to a venture capitalist about farming. You know, that's like building a skyscraper with an overdraft. If you just look at the tenure that you require in terms of a return for a venture capitalist vis-a-vis the type of business that you're building. And now this conflict more or less started happening at a shareholder and a director level. And there was an opportunity that came up for the business, and sadly the Twiga shareholders moved away from primary agriculture. And it's something that I felt I was really passionate about, and I decided to go ahead and invest in the opportunity directly, which is what is Celu today. But during that journey, that dissonance continued, and it got to a point where it was very, very dysfunctional in terms of how everyone was pulling in different directions. And it got to a point where I had to make a call. Do I have to then step back and maybe let some of the shareholders pursue this opportunity forward, while I then pursue the real thing that I feel that would have an impact, which was around large-scale commercial farming. So I would say that when you're raising money from shareholders, there's all the dynamics that come with what a shareholder's DNA is. And you realize who exactly your shareholders are during tough times. And that's when you realize that there's a lot of people who are very short-term, there's a lot of people who are long-term, and when you're having a collection of all these individuals, sometimes it can be very difficult as you're trying to transition a business. So that's when I made the call to leave a business. And actually moving out of something that you founded is quite tough. It's grief. So you go through the stages of grief as you then dissociate or distance yourself from the business.
Yeah. So I want to talk a little bit about the mental impact that had on you. But I want to ask Yomi first. For a few people here do not know that apart from the challenges you faced with Eyowo, you also had your beach, not too far from here, demolished because the federal government decided they want to build a coastal highway. You've had those two experiences in the space of, what, a year or so? How has that impacted you mentally? What are some of the lessons that you've learned from that? And I want to ask you this personally. Why do you still believe in this market despite everything you faced?
Okay, I think I'm going to start from perhaps like the last question. Why do I believe in this market? I think the upsides of this market are really great. I think that we're in literally a land of opportunity. There's barely a scratch on a couple of things. I think in the earlier conversation, I was hearing someone speak about non-consumers. So we're in a market where the median age is about 18.6 years old. We're bound to grow to about 400 million people by 2050, in 26 years' time. You're going to have a population of about, almost 50% of them are going to be 22 years old. So I think we're just primarily just getting started. And if we're operating in the digital space, what that also means is that, I mean, in 25 years' time, you can imagine the level of digital penetration that will have happened. So I'm here for like literally the long run, and perhaps these are just like early days of it. Mental health, and in terms of like what toll did you take on me, I think it was quite a really tough time, especially because of the level of uncertainty that came with just like, waking up in the morning and all of a sudden you hear that your license has been taken away from you from the news. It's not like you got a letter from the central bank. You just wake up in the morning and you're trying to go to work and, just preparing for the day, you realize that, you have no license any longer.
They need to inform you directly.
I was literally going through my phone in the morning and I learned that our license has been taken away from us. So there was no formal notification that said, tomorrow morning we're going to make an announcement. And that generally obviously kicked off a lot of panic. Panic from customers. I mean, people had money in the bank. By the way, for anyone who didn't know, Eyowo was a digital bank, or is a digital bank, as the case is. And you wake up in the morning, it's almost like you're on this 6-hour flight, you're about to land, and you just heard, there's turbulence, and there's some voice coming up from the public address system saying like, we've just lost an engine. And literally the next thing you're waiting for is, okay, Mayday, Mayday, and let everybody just I guess, go home. So it was very tough, and it was very challenging. And it took, I'll say it took quite some toll on me, I think perhaps initially. However, it didn't take time for there to be like a shift in perspective, because I didn't even have the time to, I would say, mull over what has just happened. The phones have started ringing, people need their money. There are hundreds of thousands of customers whose money have been stuck in the bank. We didn't know beforehand, so there was literally no response plan, at the time this was happening. However, I mean, in terms of like lessons learned from just going through that, just to get right to the point, I think it basically gave a real new meaning to resilience for me as a person. You think about resilience as, you can go through difficulty, you can overcome challenges, and I've been an entrepreneur all of my life. I've never worked anywhere. I've done this for about maybe 17 years. So I've seen things. So I'm like, okay, yeah, I can go through things, right? But when you're going through what you don't understand, is a different type of ball game, and you pretty much want to stay very adaptable. You're not particularly clear on, so you're thinking about why me, why us, why now? Why don't you guys just wait for maybe a month? I don't know, just before this happens. But the mental shift is mostly to pretty much get into what now. I mean, there's no more time for why me, why us, and why now. Just what now? What do we do now? And adaptability and a lesson from resilience at this time would be just really thinking through, what do I do now? And realizing that as you do is how you get informed. So you act, you get informed. From the information you get, you take new action, you get informed again. When you don't know where you're going, you pretty much figure out the path on the way. So it was quite a lesson about why it's important to stay adaptable. The second important point would be transparency and communication, really. And this was very difficult. I think it's very easy to look back and just say it's transparency and communication. It's a very difficult thing because you're attempting to communicate what you don't know. You don't know how people are going to get their money back. You have no immediate answers to that. The NDIC, which by regulation takes almost immediate action. And this also gave me an incline into how banks felt about digital banks. It took about 24 minutes for 27 banks to pretty much decommission AOO. I'm like, wow, I'm reading the news, I check my phone, is it working? It's working. I check it again in 24 minutes, nothing is working again. So I think there was just the entire rush off as the case is. But I'll say transparency, meeting our customers, letting them know the things we know. We're sure about these things. We know that we've taken our license. That's all we know right now. We don't know how you're going to get your money. We don't know exactly how this will look like. But please be rest assured that we're not going anywhere. We're going to make sure that we address this issue. But as you communicate more, people get more agitated. They feel like, tell me something. Tell me something. So you look for something. You kind of go find some information, get some inclination as to how will you come out of this, right? And when you communicate things that rely on other people, the burden of communication is on you. And when something goes wrong, everybody's like, no, that's not what you said. That's not how you said it was going to happen. But I'll just say that the real point here is that transparency and communication and ensuring that being honest at every single stage, whether it was with our customers, with our team members, and just maybe with our partners, was also very, very helpful. The last point I'll make would be around just really, really understanding that, this is something that has happened. You have to accept it. Yeah. There is no amount of denial that can take you out of it as the case is. And I'll say perhaps that's how we handle the moments at the time. Yeah.
Okay, so I want to ask just a very quick follow-up question. During that period, who did you have to lean onto? Because I imagine, again, you're going through something you don't understand, and you're probably going through something a lot of people around you don't understand. Who did you lean on? How did you manage your employees? I imagine there were lots of questions, people not sure, what's the future of this organization? How did you handle all those things? And then what was your support system like?
I have a partner, so I think that burden is shared, so I could relate with, I think it was Tayo, I'm not sure, I was saying that earlier. I have a partner, so I'm never really alone. Shendi Olabayo, we're pretty much always in this together. So we kind of like was just making a fun of ourselves. Like, you know, like you feel like, man, you're doing things and all of a sudden you don't even know what you need to do. So it was, first of all, like, I would say leaning on each other I would say that was a very good thing for me as a person. My wife is a psychotherapist, so I think I have a bit of more tools as a human being in terms of like going over difficulty, getting over difficulty. So she was also a really big person for me at the time. She offered me perhaps all the tools I needed really in terms of like, you know, how to wake up in the day, how to think about this, how to not place the burden on the self and just focus on the problem. The team as well, the team in the company. And one important thing I also learned is that when there's difficulty, you don't isolate people. A lot of times when there's a lot of difficulty, you want to reduce your interactions, not because you don't even want to interact, but you don't have immediate answers, all right? So I'd say the team as well was a very good thing I leaned on. Self-care. So I got into doing things that makes me forget about everything. Like when I'm playing tennis, I don't even remember that there's a license issue as a case. So I kind of like got into a couple of new habits that made me at different times disconnect from the reality. You know, stay delusional for whatever that moment of self-care was for me as a person. So I'll say I also leaned heavily on that. And the community, a number of people, because I would say perhaps the most daunting side of all of this is that all of our bank accounts were placed on PND. So you have a license problem and you have no money. And you know, I'm not sure I have so many friends as a human being. So I'm like, wow, where do I begin this from as a case? But I think a number of people really came true for us. People within the ecosystem. So I'll say people within the ecosystem, the team, my partner and my wife were like real things that I leaned on at the time. Yeah.
All right, thank you very much. Yeah. Thanks. Peter, now, okay, so you're leaving Twiga. How do you mentally readjust to the reality that this company that I founded is sort of slipping out of my fingers, and then you now have to tell yourself, all right, I need to start afresh. What are some of the things you did and the steps you took to reestablish yourself, and what are some lessons that you're taking from Twiga into Celu?
So thanks a lot for that. So I think one of the biggest challenges is when you're running a business and the business is doing well, you get conditioned to good PR. So everything you say is positive, it runs well with the media, and that more or less reinforces a lot in terms of how you see the world. And I remember when I started having the negative PR, because now you become the face of the problem. The same way you are the face of success, now you're the face of a problem. And I remember one time I woke up and I was a headline. I had my mugshot in the front of a business newspaper. And it wasn't a good story. And I was asking myself, how do I even get out of bed and face the world? And very soon, and actually, just on a side note, I went and I talked to the journalist who did the story and asked him, what joy do you get in publishing some of this information? Some of it is not factual. And he just looked at me and he told me that, you know what? You have more clicks on your link than our front page in the newspaper. So I'm not going to walk away from that right now. So that meant that, I still had a lot more negative PR coming along. And during that time, you can imagine now the noise that it is creating, the credibility is eroding. I had built my reputation over a 20-year period. And in 6 months, some of these young journalists who had nothing to lose had a huge chunk of it go away or just disappear into thin air. And you can imagine what that does into your ability of fundraising, what that does into your ability of attracting new talent, what that does in terms of your ability to even talk about what it is that you're doing in a credible way. So a lot was taken away in a very, very short span of time. And one of the things that I knew is that, investors are true to a few things. One is around return, and two, the size of the opportunity that you put together. It doesn't matter your context. If you're able to present those two things, then that creates some redemption with a certain cohort of investors. So as I was building Celu, one of the things I focused is I took then my resources and I invested in this business. And one of the key things I focused on was how do you then create a very compelling business model? How do you show the world that you can actually farm? And I'll give you an example. You know, in the area that we're doing maize farming, so the farm that we're running is about 3 times the size of Manhattan in terms of the size of the area of the land. And you can imagine now putting together infrastructure and starting to do farming. It's a very dry area. And a lot of people were not even convinced that you can actually grow food commercially in such a dry environment. And by doing that, we took a huge risk. And again, it paid off because we got yields that are as high as some of the highlands where you have most of these products being grown. So we took a lot of risks, but they were very, very calculated, but it was facing one thing. Investors look at risk. And all we were focused on is how do you reduce that risk? How do you convince somebody to part with their check? And where we've gotten right now is that we've gotten a lot of the big global players in the agricultural sector. We're working with the largest seed company in the world. We're working with a big farm management business. But the key thing is that to get to that point, it meant that you had to be very focused, and then you have to drown the noise that is around you. Because if you let that noise get to you, the level of depression and so many other things that will come after you is quite significant. And you've seen that there's a lot of people who are not able to transition from one opportunity to the next. And I think that level of focus for me was what really, really helped. And sorry, one other thing is, especially as an entrepreneur, have a balanced life. Don't bet everything on your company. Ensure that you have a balanced life as far as your family goes, have a balanced life as far as your friends go, and also have a balanced life in terms of spirituality, whatever that means for you. And by having these things, it ensures that when one area is not working, you have 3 that are working that you can then leverage on. Otherwise, the risk of losing your mind is very, very high.
All right, thank you very much. I want to talk about pressure and dealing with pressure, coming out of pressure. And just for the audience, in a few minutes, we're going to open it up for you. So if you have any questions for either of them, just get ready in 7 or so minutes. Let's talk about pressure. How do you handle the pressure of change? How do you handle the pressure of, dealing with failure and coming out of it and making sure that some of the things that happened in the past do not happen again? Yomi, you can go first.
Pressure. I think that the kind of pressure you experience from a very daunting difficulties, perhaps maybe not comparable to everyday pressure as the case is. But how do you kind of like undo pressure? How do you like deal with difficulty as a person? I think first is mostly about perspective, maintaining the right perspective. The perspective for me would be that a lot of times we personalize things. We want to, so for example, something hasn't gone the way we want it to go, and we've all of a sudden it's now about us, about who you are as a person. But in reality, that is just that thing. So being able to separate yourself completely from what you're doing, who you are and what you're doing, being able to effectively separate that person from what you're doing, I think is a big way to kind of like deal with pressure. So if something was intense, that was what was intense. It didn't mean that you as a person needed to be going through any intensity. So I'll say first is about perspective. The second would be about just realizing that you're in the market. The market itself is a dynamic place. And if you're in a dynamic place, you need to maintain a dynamic mindset to that dynamic place as the case is. So having a mindset of adaptability, knowing that things can happen in the market, and when things happen in the market, you need to be fluid enough to be flexible to respond to change. So I say staying adaptable, maintain the right perspective and staying adaptable. Lastly, I would say as well, making sure you have an healthy life. I want to really buttress what Peter has said. And to a large extent, if you are in this environment where perhaps the burden of success or the burden of performance or outcomes, whatever name you want to call it, is so extended, you have such a huge amount of people who are depending on you to succeed. So a lot of times, it's not even really about you, it's about what is at stake. So it's very important to ensure that you have an healthy lifestyle that ensures you can give yourself to different things. There are times where, during this period, for example, what I'm deriving joy from is mostly like doing assignments with my daughter. And that time feels like a successful moment for me as a person. So I'll just say like maintaining the right perspective, staying adaptable, and just really making sure that you have a balanced and healthy life. Yeah.
Thank you. And Peter, please.
I think in my case, one thing that helps me deal with pressure is in life, you cannot choose what happens to you, but you have a choice in terms of how you react to it. And I realized that I did not have power on anything that happens to me, but I have a lot of power in terms of how I react. And that really helped me start dealing with a lot of its challenges. When something negative happens, then you need to find it in you to start seeing the positive elements in what it is that is happening, and how do I leverage some of those points. When I look at where we are today in the business, it's been a journey. I've gotten a few people who've believed in me throughout this journey, but having that mindset is what has helped me carry through to a point where now I'm having investors back on the table. We're now closing again on this venture, and to get to that point, it means that there's something significant that you have to shift in terms of how you see the world and how you actually react to how the world what the world puts on your feet.
Okay, this is a question for both of you. What is the most surprising thing? So out of all this, when everything started, I know you've talked about how you found out. I'm still very shocked that you found out about your own license revocation on the news. But apart from that, what were some of the most surprising things that you had to deal with that just left you shocked? Like is this really, really happening? What are some of those things?
I think the strength of people first.
Okay.
People are incredibly strong. And it's really amazing when a problem happens, you kind of like realize that even a person you thought perhaps didn't have the bandwidth. I mean, let me speak specifically. There was this young girl. I think she was in Ekiti or so. She had money in the bank, and she'll call me. I gave her my number at some point. She'll call me and she'll tell me, "Oh, I need this money," as the case is, and I need to get this money to do something. And as I walked through the process of trying to resolve, perhaps getting my own personal money to her, just making sure she can continue to do what she's doing, she would say, "Oh no, I shouldn't worry," that she's willing to wait through the process. And the more I tried to find out about who she was, what I could tell was, it wasn't a case of that she was okay or she could deal with that problem herself. She was very empathetic towards our situation. So like, "Oh, I've been banking on you guys for a long time. I really like the service," and it just kind of like, and many experiences, a number of experiences are similar to that as well. It just shows you the strength that people have to withstand pain. And sometimes, sometimes it's the best thing to do is to give up. Yeah. But before you do so, kind of like checking yourself. You have something inside of you that literally can withstand, difficulty. I'll say the strength of people. What was surprising to me was also the response of the regulator, because after learning about, this happened in the newspaper, I in my mind I'm like, "Oh, this is an adversary, literally, why do you do this? Create so much chaos." But they were, I would say throughout that journey, they've become a partner of progress. They were so willing to resolve the issue. They wanted to make sure we could perhaps, stem the issues with our customers. I was very surprised. I was expecting, it was going to be an add-on, you guys have, broken some rules, because it was really unclear to us for a very long time why this happened. Perhaps a number of it's still unclear. But it's resolved now, so that's behind. But I would say the reaction, the behavior of the regulator was very, very encouraging. And I think the central bank, as an agency, as an institution, won a lot of credit points with me as a person during that period. I think maybe those two things, apart from obviously just learning in the newspaper that our license is over. Yeah, thanks.
All right, thank you very much. Peter, please go ahead.
I think in my case, one thing that I learned through this whole process, and for me was quite surprising, is in this digital age, when information travels at very, very rapid speeds, it is quite surprising that people's perceptions of you and your credibility can shift overnight from something that you have worked on and built over an extended period of time to having all of it shift in a twink of an eye. And one of the things I've had to learn through this is that I've had to work very, very diligently to rebuild over close to 2 years what took a very short span of time to just get me back to on track, especially with things like fundraising and putting together teams. So one thing I would say is that even when things are going well, it's to be very thoughtful about what type of PR am I putting out there. Is this going to be PR that will then be fodder for me later? Or am I building my PR in a way that allows me to have setbacks in future and appear human? Because if you do not appear human or people are not able to relate with you, then of course there's a lot of intrigue and entertainment when one is going through some of his challenges. So I think for me, that was a very, very surprising thing. I've learned a lot from it, and I'm very, very thoughtful about what I put out there and what I keep.
Thank you. Thank you very much. So I have 2 more questions for both of you. This one is around changing the narrative, because that's why we are having this conversation. People often think of failure as something to avoid, but most times it is inevitable. You go through phases like this. How do we then, as an ecosystem, right, as a business ecosystem across the continent, change the narratives around failure? How can we make it more comfortable for entrepreneurs and just people that we've placed on pedestals to talk about these things so that we can all learn collectively? Peter, you can go first.
So I would say that failure is part of a journey. It's not a destination. So, and if we continue viewing failure as a destination, we will never then take away the stigma from it. So, and that's the way I look at it, because, and I was reading an interesting article, and many of you know Michael Jordan, and in 300 games, he missed 9,000 shots. And in 26 of those games, the ball was passed on to him, and he was expected to make the final shot that was a winning shot, which he did not make. But today, we still look back at Michael Jordan as the greatest player that ever lived on the basketball court. But the key thing is that for him, he was able to wake up the next day and perform at the similar level to what he did yesterday. And I think that's where we need to get to as entrepreneurs. You will have a setback today, and it's okay. You know, sometimes when your idea meets the real world, things will not work out as planned, and it's fine. And what you need to do is wake up tomorrow and try again. And if something did not work yesterday, change it. And do not be beholden to holding on to something that doesn't work. And that level of dynamism is what creates success. I know there's many successful entrepreneurs sitting here. Their journeys were not smooth. There's days that they had were good days, and there's days that were bad days. But what happens is that we've just learned to celebrate the good days. And it is important for us to also see these are the bad days. And how do I then manage myself through some of its challenges? And the more we're able to do that, I think the more resilient we will become as an ecosystem.
Yomi?
I think it's Sigmund Freud that says that failure is part of everyday life. And if you drop a plate in the kitchen, you pretty much just failed in holding that plate as a case. I think we need to normalize failure for a number of reasons. I think failure is literally packed with lessons. If you think about success on its own, is often an achievement of an outcome. And when you succeed, you learn how to succeed, at least. Like, you know, oh, this is a way to get things done. But failure gives you an extension of knowledge. It basically allows you to learn what hasn't worked, what works. And perhaps maybe the meaning of success itself needs to include just being able to learn a lot of lessons, the growth, the character you build as a person going through failure. I think just normalizing it as another activity within the ecosystem will be something that will encourage a lot of people to try things, to share more. So I'll say the normalization of failure will really go a long way. Also, I mean, when failure happens, you know, and your person, I mean, I could relate to what Peter was saying about your perception changes so quickly. You all of a sudden you kind of like you'll have used up all of your capital just because you just went through a damning event. So I think it's very important for the ecosystem itself to really, I guess, be open-minded to ensure, to kind of like know that the journey of life is literally a long-lasting one, and failure is just a setback on that journey. So normalize failure and embrace things when they happen, as the case is. Yeah.
Thank you very much for that perspective. And so the thing about perception and how quickly it changes, I think a lot of that also has to do with the journalists who cover the business ecosystem, right? Because, I mean, as someone who I've spent the last 10 years or so doing journalism, I think it is important for us to not report stories, for reporters to not talk about stories and entrepreneurs from a place of almost like glee or schadenfreude, right? It has to be more constructive. It has to be from a place of, okay, this is what happened, these are the lessons. I mean, you don't have to be very explicit like that way, but it has to be more constructive, because I think when we approach these stories that way, in that manner, it's going to encourage more people to be open and less cagey with things that they should not even be hiding at all. So thank you both very much for that. Do you have any questions from the audience, please? Any questions? Please raise your hands. Okay, that's one. Anyone else?
Can they please pass the mic over to them?
Okay.
There's a question from the gentleman at the back.
So if you have a question, your name, your question, and to whom your question is directed.
There's room for just 2 questions because of our time.
Hello. Hi. My question is directed mainly to, the panelists. You mentioned something about when you engage with failure, right? The ability to separate yourself from what has happened to you, right? But then as an entrepreneur, like for Yomi now, he has been an entrepreneur, I think, all his life. How do you separate yourself from something that is basically the embodiment of all your life's work? My name is Emmanuel Adeleke.
Yeah. Hi, Emmanuel.
Hi.
I think it's easy said than done. Let me start from there. I think it's easy said than done. When something happens to you, I mean, there are a couple of things that go on inside of you that pretty much get you in this emotional state of like, oh, why is this happening to me? Why is it about me, as the case is? But I think over time, what you will eventually realize is that you're not going to have a good day every day. It's not going to be a good day every day or a good month every month, right? So if something is never going to change, if you will have to have something to solve, a problem to address, a difficulty to get past, why would you let something that you can't necessarily control take control of yourself, of your life, right? I think coming to that reality, perhaps is the beginning journey of, just attempting to separate yourself from what has happened to you. It doesn't mean people will separate you. I mean, and I don't think that's something you should worry too much about. People wouldn't separate you from what has happened to you. They will try to define you in that manner, but it's not.
To face your challenges, but I want your success. I heard you talk about like how you are enjoying like doing assignments with your daughter and stuff like that, and I can relate. But the reality is that if we want to build some of the kind of businesses that we've seen today, it still takes a lot of blood, sweat, tears, and grinding. So how do you sort of find that balance between, at this stage of your life, trying to enjoy some of the things that you consider, to matter more, and still building something great? Because I feel like the beauty of the end of the story will be when we still build something that we're all proud of and that we can pay forward. My name is John. Oh, amen.
All right. So I think it's because you want to have more balance. Does that mean that does not mean you're taking away intensity? The intensity has to be there. We're in a difficult environment. If you just look at the African continent, if you're starting a business in Africa vis-a-vis somebody starting it in Europe, here in Europe, you basically have to focus on your intellectual property with the problem that you're trying to solve. In Africa, you have to then focus on the IP that you need to build, but you're also responsible of creating an enabling environment for you to thrive, because that enabling environment in most instances does not exist. So the reality is that you have to still have the grind, you still have to have the passion, but the most important thing is that it's to have the balance. to then say that, yes, I can have 13, 14-hour days, but what am I being deliberate about how I'm also thinking about family, about how I'm thinking about friends? Because if you become a recluse and all you're focused on is your business, then everything that doesn't happen well in the business then impacts you disproportionately as an individual. Is to then say that there will always be disappointments, but let's strive to have more balance in terms of how we look. But that should not compromise the intensity.
Okay, let me add something to that, just to buttress what Peter said. I think it's really about time utilization because there's practically no way as a human being, as an entrepreneur, as a CEO, that you can spend all of your time on your business. So if you're being honest with yourself first, and you diagnose your life, you're not spending 100% of your time, all the time on your business. However, there are certain things you need to spend time with so you can spend the best of time with your business. And that's really what I think I've understood balance to now mean. So it's almost like I need to do this so I can do this well. This business is really important for me. I need to be able to maintain intensity. So when I get my time off it and I sometimes zone out of it, or I'm spending time with other things that are really important to me, it means that when I'm back to the business, I can focus. I'm generally a scattered mind. I have some ADHD conditions. So I need to primarily figure out how I can concentrate on something for 2-3 hours. Like, can I sit on my desk and not move to another browser or go to my phone? And doing those things off work has helped me mostly like sharpen my focus. And also honesty with myself that I'm actually not doing time all the time with my work anyway. So I better spend that other time that I'm not doing my work on something that is really important to me and makes me even better at work, as the case is. So I would even say I'm doing all of that for work as much as I'm doing it for my daughter, as the case is.
All right, thank you both so much. Please let's put hands together for Peter and Yomi, please.
Thanks.
Thank you very much. Thanks. And I hope you enjoyed the session and learned a few things from it.
Thank you so much.
Ladies and gentlemen, please, once again, a resounding applause for our esteemed panelists. Do not rush up just yet. Please hold on for a photograph session. Thank you so much for that enlightening conversation. It was a rich and insightful one. Thank you to the moderator, David I. Adeleke, the founder and publisher of Communique. And thank you to the panelists, Yomi Adedeji, co-CEO Eyowo, and the CEO and co-founder Softcom. And last but definitely not the least, the founder and the president of Celu Group, Peter Njojo. It was a rich conversation, and there's certain things that I took out from that conversation. And one of the major things that I took out was that setbacks are inevitable, regardless of the planning, regardless of the preparation. And that's because that's just how life is. So in Nigeria, there's something we call it, and I'd like to teach one of our esteemed guests from outside of Nigeria what we call it. Are we ready to hear one of them learn what we call this phenomenon in Nigeria? Sir, would you like me to teach you what we say in Nigeria, the Nigerian parlance? Indulge me. Can I go ahead?
I would love to.
You would what?
Yeah, please go ahead.
Great. Okay, so everybody please listen. In Nigeria, we understand that setbacks are inevitable. And there's something we call it in the Nigerian parlance. And it's basically Wahala no dey finish. Would you like to repeat that after me? Wahala no dey finish. So try that.
Wahala no dey finish.
Wow! A round of applause, please. That beats my expectation 100%. Thank you so much. Once again, please put your hands together for that. I know that even some Nigerians cannot do it as good as he just did. Thank you so much, sir. And I'm sure you won't forget that in a hurry. So that basically means that we can be careful as much as we want to avoid pitfalls, but life's journey is always a topsy-turvy one. And what we can do is learn to balance it. We cannot really get rid of some of these challenges, but we have to learn to balance it. And you heard them talk about how to deal with pressure. Do what you love. Spend time with people that you love, because really, wahala no dey finish. Please, ladies and gentlemen, once again, a round of applause. Very quickly, without wasting much of our time, we'll now go into the second panel session. And this is where the distinguished panelists will be speaking on a very pivotal topic that tends to fly over our heads, even as entrepreneurs, businessmen, and women. And that topic is navigating regulatory compliance through ethical governance. This session, ladies and gentlemen, will be moderated by the publisher of Afri Digest, a media platform that is focused on Africa, tech, and economy. And in his words, he's concerned with making smart people smarter. So ladies and gentlemen, please, with a resounding applause, join me as I welcome on stage Emeka Ajene. Put your hands together, please, for Emeka as he comes up stage to join me. He will be moderating this session alongside the distinguished panelists that I'll also be introducing very shortly. Ladies and gentlemen, the next panelist is the CEO, Standard Chartered Bank Nigeria Limited. Put your hands together as I bring up stage Dalu Ajene. A round of applause, please. And coming right after him is the CEO, co-founder, Zone. Please, a round of applause for Obi Emetarom. I can't hear no clapping in this place. Please put your hands together as he comes up stage. Kindly remember that this is in no particular order. Ladies and gentlemen, the next panelist that we have is the Chief Operating Officer at Lithia Capital. Put your hands together for Yewande Adewusi as she comes up stage. And last but not the least for this panel session is the Commissioner of Finance and Economic Development. A round of applause for Akin Oyebode as he joins us on stage. This session will be focused on the discussion around navigating regulatory compliance through ethical governance.
Hello. Fantastic. Hello, everyone. My name is Emeka Ajene. As mentioned, I'm the publisher of Afri Digest, which is a business media platform focused on Africa's innovation economy. I'm very excited about this panel. We have some heavy hitters here. You know, the last panel, Fireside Chat, was fantastic, realistic discussion around failure. And one of the reasons startups fail is actually an inability to navigate the regulatory landscape. So we want to, during this next 60 minutes, explore the interplay between regulations and innovation. And we have a group of folks with diverse perspectives to kind of shed some light. So as mentioned, Akin at the end, the Honorable Commissioner of Finance for Ekiti State, will be able to share with us some perspectives around innovation, regulations from the government side. Next to him, we have Ms. Yewande Adewusi, the CEO of Alethea Capital, who could share with us how innovation can help and hinder, regulation can help or hinder innovation from the investor's lens. Next to him, we have Obi Emetarom, CEO and co-founder of Zone, which is a very interesting company. I'm interested to hear his story and kind of how he's navigating being an innovator in a new field while there's a breadth of regulatory change happening. And next to him, we have Mr. Dalu Ajene, the CEO of Standard Chartered Bank Nigeria, who's actually could share with us what it means to stay regulatory compliant while leading a legacy institution. So really excited. I think we want the session to be dynamic. So please, as we talk through, generate questions, hold on to them, and at the end of the session, we'll come to you for your questions. So I think a fair place to start is actually with the government side. So I'll come to you first, Akin. And in addition to your role as Commissioner of Finance for the state government, you're also the chairman for all the finance commissioners in Nigeria. So I just wanted to understand from you, first of all, what's the role of a finance commissioner, and how do you and your colleagues think about the role of regulations in Nigeria's financial sector?
Thanks. I think your first job is to keep your boss and yourself out of prison. So that's pretty much your first job. And then obviously, more importantly, is ensuring that resources are properly allocated for whatever the development objectives of the government of the day is. So it's not a place where you're liked very much. I always say the Commissioner of Finance in a state is like a chief compliance officer of sorts, because they're always on limited needs with, as you know, very limited resources. And so my job day to day is to ensure we don't make too many mistakes in spending our limited resources. We're allocating resources to the areas that best drive our development agenda. It's also getting on the governor's wrong side a lot, right? Because governors are very impatient sometimes to show, because the political cycle, as you know, in Nigeria has a 4-year examination period, right? So they're very quick to say within 2 years, we need to develop something that shows the people that we've done some work, right? And as you know, a lot of that spend in the places that really matter don't deliver value over that short term. So you've got to also keep the principals disciplined to recognize that, look, you must balance the optical benefits of capital allocation with some of the longer term benefits. And the second part, I know it sounds funny, but it's very easy in today's Nigeria, to go to jail with the best of intentions, right? The procurement process in governance is very unwieldy. It's not aligned, in my opinion, to the kind of rapid development the country needs. But because we operate in a low trust environment, we have to work within the confines of what is available. So it might take you, for example, close to a year to complete the procurement process for a large-scale road, right? But that's what it is. So sometimes, even where the principals are a bit impatient, our job is to ensure they stay the course. We follow what is a somewhat unwieldy process to still achieve some of those objectives. So when I listen to startups and businesses speak about some of the regulatory red tape they experience, they speak to me like, I'm the enemy. So I can't really say to them that for everything you experience on your side, even within government, I'm also a victim of what is sometimes a cumbersome and complicated regulatory environment. I'll stop there, thanks.
No, thank you for that. Really appreciate that. Another kind of, you spoke about startups viewing you as the enemy. Another kind of combative counterparty to startups is investors at times. So I just wanted to come to you, Yewande, and another thing that was mentioned, well, first of all, I'll say Alethea Capital, you guys have invested in various financial services, fintech firms, Paga, Baobab, Microfinance, and several others. And you've also invested in kind of companies that are not in as regulated sectors. So I just want to get from you just what do you see as the role of regulations when you're making investment decisions? Akin talked about capital allocation. So just what role does the regulatory landscape by sector play as you're thinking about allocating capital?
Thank you. It pays everything. Alethea Capital is an impact investing investor, so we're always matching financial returns and social impact, and that social impact has to deal with us also being compliant. Whenever we're making an investment from the get-go, we're looking at what's the regulation around this business. What do they have to do to meet that compliance requirement? What are we going to invest to make sure they're also compliant? So we're constantly thinking about it from whatever sector. Like you said, we deal with tech, we're also in agribusiness, we're also in logistics and mobility. So you can imagine all the investment managers and the value creation team throughout the portfolio management process. We're thinking, what's happening in the regulatory environment? How is it going to impact this business? How is it going to impact returns? So it's a constant keeping on top of what's going on in the different regulators that touch the businesses that we invest in. A lot of work, and of course, regulation, there's a cost to compliance, and we always have to work with the portfolio companies to let them understand it's not a tomorrow thing. Sometimes they want to put it off, and we're like, it's not a tomorrow thing. The regulator is coming at you next week, and they're like, no, we can just put it off because we're trying to balance the cash that's available for day-to-day operations and meeting regulatory issues. So we're like, no, let's just make sure we're on top of our game on our regulatory compliance matters, wherever they may sit. And we will also make sure that it's documented at the beginning of our investment process, what needs to be done to make sure this company succeeds and not impacted and value destroyed by not being compliant.
So Obi, I want to come to you next. One thing Akin mentioned is that, it's easy to go to jail despite having good intentions, right? So for you, I think you've been building financial solutions for about 20 years, right? Maybe over 20 years now. So I just want to get your, your opinion in terms of how do you navigate, a changing regulatory landscape, right? Especially with your background from Parkway to kind of zone, app zone, the carve out, et cetera, as Nigeria has kind of had, a lot of changes in the sector.
Okay, great question. Now, in our case, we sort of evolved from literally no need to be regulated and then increasingly more regulated, right? So when we started, we were just a technology provider to banks, which meant that we didn't need to be regulated by the central bank. It was more just a tech play. Then we became more like a shared infrastructure provider that needed to integrate into banking systems, and we needed to get a license, what is called a payment solution service provider license. And so that was one layer. And so we started to see the early levels of engagement with regulators and some of the constraints that come with it. More recently, we evolved to a whole new level of a more profound license. We became a license payment switch, and more so doing payment switching with a new type of technology, blockchain, which at the time we started was being frowned at by the regulators because of cryptocurrency, which is not regulated, right? Not compliant. And so it took us from not having to worry about regulators to being in a space where we are like literally under the spotlight of regulators and just navigating how to relate with them and still do what we need to do. And what we learned in summary is what regulators want, right? Regulators want to ensure that end users get maximum value for whatever the service is provided in the ecosystem, that the operators are efficient and can run seamlessly, and I think most importantly, that all this can happen with zero risk. And so what we learned is if you can position in a way that provides regulators comfort that you're not threatening any of these needs they have, then it becomes much, much easier and more effective to engage. Four main characteristics I think we've learned about how to position in that regard is, one, no matter what, always be compliant, right? No matter what, like be the good boy, be the guy that sits in front of the class, wants to answer questions, like make their work easier, right? So that's one thing. Be responsive, be open and transparent with communication. That's one. And then the other thing, which is surprisingly key, which many people don't know, is people think regulators don't like innovation, but it's not true. It actually makes them look good. And the reason why is when there's a new innovation that is successful during a particular regime of a regulatory body, they usually will take ownership and credit for it. That, during our time, this is how this industry improved. So being seen to be contributing towards that, innovating in that direction, is a very good thing. The third thing is the relational part, engaging, communicating. So regulators like you to interact because they want to have visibility into what's going on. They want to get information, and it's just that human relation thing that is just real. I think the last thing is a reputation for integrity, because the way regulators think is it's about risk, right? So they're assessing who is a more risky candidate, who is not. So they tend to be more comfortable with, say, founders or leadership teams, CEOs or leadership teams who have a good reputation or don't have any questionable reputation. And it's easier to get things done, it's easier to influence, it's easier to engage. So yeah, these are things in summary in our sort of journey from zero regulation to almost maximum regulation.
No, that's fantastic, and I think we'll come back to some of that in a bit more detail. So I think so far we've heard from a founder's perspective, an investor's perspective, and a bit commissioner's perspective. I'll just say that. So I want to come and talk to Dalu. Obviously you run Standard Chartered Bank Nigeria. I think the bank generated something like close to 100 billion naira in gross earnings last year. So I'm just curious, and if you think about, the tech ecosystem, a lot of people, maybe warranted or unwarranted, think about regulations as a barrier to innovation. But there's another way you could look at it in terms of, it's creating opportunities, creating defensibility, et cetera. So just from, your perspective as the CEO of an incumbent traditional institution, just what's your view of regulations?
Hi. Okay. So I think broadly speaking, I think, my panelists have spoken a lot of given different perspectives, but I kind of broke it down into three words came to mind. So integrity, confidence, and trust, right? And when you think about regulation and you think about those three words, and funny enough, it says ICT, but we're in an environment where we all interact in a system, whether it's a bank dealing with individuals' savings, and leveraging those savings to be able to deploy capital in a range of areas, the integrity of that system has to be sacrosanct. And I think it cuts across whether banking into, fintech, investing, etc. The concept of integrity is not just an individual integrity, but it's integrity of the system, integrity of stakeholders, and everybody that actually plays with information that's transparent and one can actually analyze, be able to assess, and be able to make informed decisions. So integrity is quite important. And I think integrity leads to confidence, and confidence leads to trust. And all of this has, regulatory underpins that gives the guardrails as to what defines these three factors, right? So the way I look at regulation is that regulation provides guardrails that enhances the integrity components, the confidence components, and the trust factor. And when you go out of whack, then systems fall apart. And it's the function of the regulation to bring those systems back in order, right? So I was listening to Obi's comments around, transparent engagement with regulators. So transparent engagement with regulators is not just a function of, regulators trying to get into your business for the sake of it. I think regulators appreciate that change is ever constant, but it's important for them to be ahead of the change and be able to anticipate how that change impacts the integrity of a system, right? And so long as the change and, components of that change doesn't threaten integrity of the system, then I think regulators generally are okay. But where it threatens the integrity of a system, then it's the onus of the regulator to actually think creatively as to how to put the appropriate guardrails to ensure systems don't fall out of whack, right? And I think that's a very important component, particularly when industries either scale or method or whatever. It's important to be able to get guardrails in place to ensure that the actors operate in sync to be able to enhance confidence and trust. So I think that, for me, is the function of regulation, whether it cuts into banking, whether it cuts into fintech, whether it cuts into technology. It's around a system and ensuring that that system has the components of, again, integrity, confidence, and trust to allow it to scale and blossom.
Oh, fantastic. So just, I guess, on that point, and Obi, I'll come to you, right? So Dalu talked about guardrails, among other things, and I'm curious to kind of dive deeper. So Zone is billed as Africa's first blockchain payments network, right? Certainly, I mean, I shouldn't say build, it's, reality, right? But so in that sense, you're pioneering, something new, something that affects a lot of lives, a lot of transactions, and you're doing so in an environment that hasn't historically been friendly to blockchain and crypto, right? So, to use kind of the language that you mentioned, kind of the right guardrails haven't necessarily been in place, and there have been a lot of changes in terms of, depending on, as Akin mentioned, some of the, who's in charge, right? So I just want to get your sense, from in terms of war stories, right? Actually building and rolling out core, separating core from your business, your banking as a service platform, and focusing on Zone. Just how, what are some of the obstacles to kind of staying regulatory compliant that you guys faced, over the years?
All right, cool. So the first thing was so blockchain has been deployed as the main enabler for cryptocurrency, right? And everybody knows about that. And like I said, regulators, because cryptocurrency is not compliant, right? AML, KYC, and some of the other things. So regulators have become like really apprehensive all around the world. And so the first issue was you're trying to take this technology and implement for traditional like banking and payments. And so the first was that skepticism. And when we launched, or when we were running our pilots, it coincided with when a lot of crypto firms were being shut down by the central bank. And so the first thing we had to do was create the clear separation, right, between crypto as an application of blockchain and blockchain as a tool, as a technology, right, that enables efficiency. So that was the first thing. The other thing which is really, really critical, or became critical, is we needed to align what we were doing, even though it was different, with the existing regulation as much as possible, right? So sort of walk back, even at the expense of compromising some of the capabilities of the system, right? Just as an initial entry to be able to comply as much as possible with the existing regulations, because we realized that would be critical. And of course, we got advice from a lot of the banks, right? The banks advised that, hey, look, even though this is different, here, and here, I would advise you sort of align this with what exists. And that helped. The third thing, obviously, was now a lot of education with the regulators, just showing clearly how this works, how it's different from crypto, how it enhances the industry, how it aligns as much as possible with the existing regulation. And yeah, so we had a lot of that engagement. And to everybody's surprise, around that time, rather than get shut down, we actually got an approval, what is called a letter of no objection to deploy this new technology into the industry. And that's when we realized that, look, regulators are actually excited about improving. They want to improve the system. And we showed clearly, again, one more thing, like problems, specific problems that you're solving that the regulator cares about. That's really critical. So if you're talking about things like reliability, for example, or helping to improve security, or helping to improve the customer experience, and so on. These are genuine issues that regulators, in the financial services industry, so central bank particularly, where like they pick their imagination that, oh wow, this helps. These are issues we've been thinking about how to solve. And so for me, it was an interesting experience seeing that we could achieve the exact opposite of what everybody thought at that time. So that's for us. It's been a good ride. What we continue. So we've had subsequent engagements with the central bank to roll out subsequent features, and the common sort of denominator across board is just carry along, continue to carry along, continue to be transparent, continue to engage, continue to educate and explain, and so on and so forth. And we'll just keep doing that.
Thank you for that. I think that's very practical in terms of the advice for entrepreneurs in the audience here. And in terms of that practical advice, I want to come to you, Akin, I guess from the other side of that. If you think about regulations and I guess collaboration effectively. So the question for you is very simply, how could startups, founders, entrepreneurs collaborate effectively with government bodies when developing and influencing regulations and policy?
Look, I think Obi has sort of set the tone very well, and the conversation starts with trust, right? So we're in a fairly low trust environment. So businesses think regulators are either there to raise revenue or just increase red tape. But that's very far from the truth. I mean, if I sit down, whether it's the central bank, whether it's FIRS, whether it's SEC, a number of these regulatory agencies actually have a mandate to improve the lives of the people, right? So it's how do we improve these systems to ensure that there's the right level of trust. So if you start the conversation from a perspective of that no one knows the business better than the operator, right? So the regulator, unless in few cases where these are operators who are now, so if we, for example, say to Dalu, go and help us run the central bank, right? As a bank CEO, you then understand at least we expect that you have a decent knowledge of financial system stability, etc. But in many cases, these are people who don't have that much industry experience, right? So they lean on you, the entrepreneur, to actually help them understand what's happening in the environment. You know, where are the sands shifting? You know, what do the tea leaves read? So if you say, I don't want to be a thought leader, then you do yourself a lot of disservice. Because when these guys are setting up these regulatory environments, they're speaking to businesses, they want to talk to businesses, they want to hear your opinion, you know, they want to expose draft regulations to you. You know, whether it's a revised tax code, whether it's a code governing cryptocurrencies, for example, you know, even in who governs that. I remember when the crypto conversation started in Nigeria, and just because I took an active interest in it, there was a lot of debate about where's that governed. Is that the central bank because are we treating it as a currency, or is that the SEC because we're treating it as an asset/investment, right? At the end of the day, when the SEC took over, you know, that regulatory authority, they also wanted to engage with companies who participate in that space. Let's even understand what the risk profiles are. You know, from a tax perspective, FIRS wanted to get in the room to say, how do we tax some of these revs, right? What are the capital gains here? How do we extract that much value? Where the exchanges sit outside Nigeria, but the beneficial interest is in country, how do we ensure Nigeria doesn't lose revenues on that? Many of these guys were happy to say, hey, you know what, this is a sandbox, let's go in there. This is what we're trying to do. These are the systems we're trying to deploy. How does that affect PSSPs? I know some of the active PSSPs went in there and said, look, you know what, some of these things have, you know, data protection, regulatory impact. How do we also ensure that our investors don't get antsy, right? To say, look, yes, you are complying with regulation in Nigeria, but that compliance opens you up to all sorts of infractions globally. Now, no one has all the answers. So the less you engage, the more likely that the outcome will not be ultimately beneficial to everybody. Not to the startup, not to the regulator, not to the ecosystem, right? So I think for me, the first point is that engagement is necessary. Second point is, again, I think Obi makes the strongest point that every regulator wants to say, hey, during my time, you know, we advanced the ecosystem this far, right? So everyone wants to show that they're winners, you know, and so they'll always want to listen to people that can start the conversation by saying, my job here is not to fight with you. My job here is to make your job a lot easier. So, for example, in the states where I sit, the biggest problem I have is how do we collect revenues, right, from businesses and individuals. But we're not going to go after people with a stick, right? We're always willing to say, hey, you're a university, you run a business here, come tell us your pain points. You know, what's broken with our system? How can we make the tax code easier for you, right? Because we recognize that a rising tide lifts all boats. So from a government perspective, you know, you can't tax or regulate people who are not in existence. So you are joined at the hip because you need these businesses to run for you to even have any form of relevance in the industry. So I think summary is, look, thought leadership is very important. Sometimes it gets started by you being called in the room. Sometimes nobody even knows who you are. So it starts by you writing and just sharing your perspectives and opinion and insights publicly. But if you write from the perspective of a collaborator, not an adversary, then someone who doesn't know you sees what you've written and says, hey, this sounds like someone who's saying something, you know, important and beneficial to everybody, and you get called into the room. Because at the end of the day, you can't really agitate from outside. You know, you've got to be in that room, you've got to be part of the conversation to agitate and advance whatever agenda that you're driving to support your business or the ecosystem. Thanks.
Thank you for that. And speaking of agitating from the outside, I think, a lot of fintechs over the last decade have sprung up and are chipping away, agitating from the outside of traditional financial institutions, right? So Dalu, I want to come to you here. And, with your hat as the CEO of Standard Chartered Nigeria Bank, you have, a lot of barbarians at the gate, so to speak, right, in terms of young fintechs. So I just want to get your perspective, and staying with the theme of practical advice, all right? So just what lessons can startups learn from traditional institutions like yours, and what lessons can legacy institutions learn from startups as well?
So I think I'll start off with what we can learn from startups. I think the ability to think outside the box, be innovative, and not be bound by, call it past regulation, is an important lesson, because the ability to be creative and the ability to actually think on the edges of innovation is going to be quite critical for us to be able to move the financial industry forward. And quite frankly, I think, structures limit creativity. And we as banks, no matter how big we are, we're bound by the structures that we've inherited over many, many, many years. And trying to create a culture of innovation and culture of creativity within old structures becomes very difficult. And it's not necessarily because you don't have the resources, because you can say we have capital, we have humans, we have an ability to infuse and import talent, etc. But, the culture of innovation is grassroots, it's inbuilt, and it's raw, right? And for you to be able to have that raw ability to be able to get into the sandbox and think creatively is somewhat limited in very large institutions. And I think that's one thing that we can learn from, call it startup, fintech operators, to be able to put out a problem statement and to be able to think outside the bounds as to how to solve that problem without being bound by your so-called legacy structures. And the more we can actually embrace that, and the more we can actually embed that into the culture of a large organization, I think the more nimble, and I wouldn't call it innovative, but nimble we can be in terms of how to tactically solve and strategically solve challenges that we see within our industry. Now, on the flip side, when you think about innovative, fast-growing fintech or fast-growing companies, what you have is as you grow very quickly and think about how to institutionalize your businesses, it becomes an alternative challenge as to how to put structures to allow it to grow sustainably. So it's like saying, we have challenges with structures because we can't think and we can't be innovative. But as you become fast growth, you also need those structures to be able to sustain growth in a very much more sustained fashion, right? And there are very few companies that are able to navigate that conundrum of structures and innovation. There are a few companies, like if you look at Reed Hastings' book on Netflix, the context of how to ingrain a culture of innovation within a very, very large institution is very difficult to do, and it's very difficult to replicate. But I think the benefit that startups have is that because you don't have the legacy structures, you can actually create structures that work for the culture that you're trying to infuse in your organization. And I think that's a very important thing, because you're not going to be able to run away from structures. But now thinking about how to construct structures that give you some of those sustainable elements but doesn't kill the creative energy that exists within an organization is going to be very critical. Because I think that energy of innovation is what's going to propel both the financial industry and generally a lot of industries forward. But you're still going to need structures to be able to sustain it. And being able to create something that works for your institution I think is the unique challenges that a lot of the startups should embrace.
Oh, that's fantastic. And I think, it's, again, a practical lesson for folks building in terms of how do I, what structures do I need to create for what I'm trying to achieve. And I think, Yewande, you've seen, with Alithia being in private equity, you've seen kind of the best of both worlds, right? So you see kind of tech, 100% tech digital companies, you kind of see some real world economy companies and everything in between. So I want to come to you, kind of for, again, a bit of practical advice. Innovation often kind of moves faster than regulation, right? So in terms of the companies you've seen, the portfolio companies and other companies that you've just seen in general, just what are some of the best practices that strike the right balance between innovation and staying kind of compliant with the regulations?
Thanks for that. I think, oops, can you guys hear? Okay. I think the very important thing from the get-go, and I think that's been resonating around the room, is this partnership, collaboration, and engagement early on. The quicker you start forming those relationships with your regulator, the better it'll be for you. Because if you're coming up with some wild, wonderful thing they haven't heard of, I mean, many years ago when I was in Afina, the position was to slam it and close it down. So if you come to them early on, I'm developing this thing, you've never heard about it before, but it's gonna have a lot of impact. And like Akin said, that they wanna be the one that actually produced the regulation that made all of it work. So the quicker you engage your regulator to just say, look, I'm thinking about doing this, the better it'll be for you. I really see that, especially when you know there's the regulator will not understand because it's new, right? Another thing I find is that even working with other stakeholders like your investors, even your consumers, that engagement also needs to happen very early on. Sometimes founders think that let me just do this thing in secret and then voila. You need to carry on because there's a lot of layers in investing, right? You've got your direct Alithia, but Alithia also has people that invested in them, and therefore those theories of change and whatnot need to align. So the more you communicate, I think that's one thing that founders need to do, that communication with their stakeholders, at all levels, at all times, is important as you grow your business. And also this whole test and learn approach to product development and growing your business. I think that is really key because then you won't deploy excess resources to something that may not take off. I mean, in your world, everything's wonderful. From when your other stakeholders are looking in, they don't love it as much as you do. So they're giving you practical advice in terms of, what's the response to this? Go and check with your consumers, do they want it? And more importantly, is this gonna be a problem down the line? When you look at scale, so when you're small, the regulator looks at you a little bit light. But when you come to like our level of growth equity and private equity, you become someone that can actually cause systemic problems if it isn't done properly. So that's why the earlier engagement to understand what's the landscape, what's even a light touch that could remotely touch your business, understand those regulations and be aware of how you're going to comply with it, but more importantly, early continuous engagement with that regulatory stakeholder to make sure that there's no surprise and they slam you down like the earlier panel that we listened to, because that's it. When they don't understand, the easiest thing to do is to just shut it down, which is bad for us investors, bad for you as a business, bad for your customers, then it causes distrust and it's all a big issue. So the earlier you engage, it's really important.
Thank you for that. So I think I just want to open it up. I think we're at the end of the session. If there's one or two questions, just want to open up the floor to the audience. And
do we have any questions from the audience? There's room for 2 questions, so please, if you have your question, you can raise your hand and they'll bring the mic to you. Okay, there's someone, a gentleman there. Okay.
Okay, good afternoon. Thank you for the insightful session. So I wanted to ask to Mr. Obi 2 questions actually. As a startup, when building your team, who did you or what do you advise a young entrepreneur to do in terms of delegating the task of regulation and compliance so that we don't go to jail? Yeah, so second question is, can you give us some practical examples of major pitfalls that startups fall into in terms of non-compliance? Thank you.
Okay, great. For the first question, typically, and the thing is, complying regulation is a cost, right? And so you would typically have a chief compliance officer, right, or a compliance department. And the role is they are responsible for discovery or sort of finding out new regulations, making sure they're aware of new regulations or changes, analyzing the regulations to understand the implication, detecting where maybe there's violations and remediating them, right, as well as reporting, So this is like a typical cycle. They would also engage with regulators because there are some cases where you may not be able to comply temporarily because of major constraints. And like I said, even in those cases, you want to remain transparent, engaged. The regulator wants to have a view and be comfortable, even though it's not ideal that you're not compliant. If there's a temporary period, they want to feel comfortable that things are heading in the right direction. So that's the role. The chief compliance officer would also typically report to the board to ensure that the different areas of compliance are being approached properly. So that's the typical structure. It's not very easy to do when you're very early as a startup, but you would imagine that if you're a regulated entity, there might be some baselines, minimum baselines. You just have to achieve, minimum capital requirements and operations you have to be able to even keep the license. So that's on the one hand. So the other question is about, you talked about hiring, right? What was the second question? Pitfalls, yes, the pitfalls. So I think the biggest pitfall typically would be not even being aware of regulations, right? Especially either the implication of regulations that you're aware of, or if you don't have a structured compliance department, realizing when regulations change or when there are new regulations. And I've seen this, right, where something has been published and somebody says to a regulator in a meeting that, like, I wasn't aware, I didn't know this was the case, and so on. And the regulators hate to hear that, right? Because it's not like this thing has been published, it's put out there. You can't say that you weren't aware. And so I think because of lack of focus in that area, just even the awareness that this is a regulation, this is what you should do, or that the way it was has changed, right? That to me probably be the biggest. And so to remediate that, I think just the focus of even having a full scope of what are the constraints I have, what am I expected to comply with, what are the rules, what are the recommendations, guidelines, and all that, and making sure that it's always up to date, right? Like you always have the up-to-date version of this is the starting point on top of which you can now build other things, operations, and all the rest of stuff you need to do. Yeah.
Fantastic. Please join me in giving a round of applause to the panel here. Thank you, Dalu Obi, Yohande Akin.
Ladies and gentlemen, you can do better with the claps. Put your hands together for our amazing panelists. We've come to the end of the panel session centered around discussing navigating regulatory compliance through ethical governance. Please would like to call on the photographers to come forward. Panelists, please do us the honors and be standing for the photographs. This was the session on navigating regulatory compliance through ethical governance. I want to say a big thank you to the panel moderator, Emeka Ajene, the publisher of Afri Digest, a media platform focused on Africa tech and economy. And of course, to our distinguished panelists, Dalu Ajene, the CEO, Standard Chartered Bank Nigeria Limited, and of course, Obi Emetarom, the CEO, co-founder, Zone, Yewande Adewusi, the Chief Operating Officer, Alethea Capital, and last but definitely not the least, Akin Oyebode, the Commissioner of Finance and Economic Development. That was a rich and insightful segment, and I hope that just like I did, you also got some take-home that can help boost your business as well. Thank you so much once again to the distinguished panelists. Ladies and gentlemen, in no time we'll be taking the closing remarks and we'll be going straight to the master classes, and of course we'll be taking a look at the exhibitions as well. And very quickly, I just want to let you in on the master classes that we'll be having shortly after this, but please, the master classes will commence after the closing remark. So if you look on the screen, you see that these are the master classes that we'll be having, and these master classes will be for those who registered online for the classes. So after the closing remark, do all to locate each master class, each segment in the hall where the master classes will take place. We will be having a master class, Paga's PAS and APIs, and the topic will be on transforming operations, streamlining business with Paga's APIs and PAAS, and that will be taken by Ramon Bello, the General Manager, PAAS, which is the platform as a service from Paga. Another masterclass, or that will be a presentation in one of the sections. The masterclass 1 will be titled Strategic Synergy, Preparing for Exits and Mergers, and that will be facilitated by Peter Oriefo, the Vice President, Mergers and Acquisitions, MoneyPoint. It would also be facilitated by Ike Eze, the Managing Partner, Better Ventures, and of course Chidi Uwuchukwu, Executive Director, RMB, who will be the moderator for the Masterclass 1. The Masterclass 2 would also be taking place in one of the sections in the hall, and that will it will be centered around financing and fundraising, debt or equity, financing and fundraising, debt or equity, and that will be facilitated by Kunle Oshukunle, the head corporate banking, FSDH. Would also have the moderator, who is Michelle Wanjiku, the head Endeavor Catalyst Africa, who will be moderating the session, like I said, and of course Ridwan Olalere, who is the CEO of Lim5. And after that, we'll have the speed networking session after the master classes, and in the speed networking session, you expect dignitaries like Toluwaleke Ademosu, the senior partner, services, Veraki partners. Would also have Yinka Edu, the partner, Udo Udoma and Bello Osage. And last but not the least, we'll have Dipankar Rustagi, the founder and CEO, Omni Retail, and Ashim Egunjobi, the managing partner, Octeria Capital. And we'll have that session moderated by Ayobami Olajide, who is the moderator of that session. All right, ladies and gentlemen, we're gradually winding down on this session, after which we'll go straight to the master classes. But I would like to crave your indulgence. I would like to invite someone who is a distinguished dignitary who will help us take the closing remarks, and that will launch us into the master classes. So without wasting much time, please join me as I make welcome the president and co-founder, Daystar Power, who would help us take the closing remark very shortly. The president and co-founder, Daystar Power. Thank you so much.
Good afternoon, everybody. It's an absolute pleasure for me to have the closing remarks of today's Catalysing Conversations of Endeavor. My name is Christian Wessels, and I'm the co-founder of Daystar Power and Visage. I'm an Endeavor entrepreneur and a board member of Endeavor in Nigeria. Please allow me to start by actually thanking the board of Endeavor, our chairman, Bolaji Balogun, and all the board members of supporting this event and supporting Endeavor in Nigeria. It's also a great pleasure of having with Adrian, the president of Endeavor here, that follows another very important visit of Linda Rothenberg, the founder of Endeavor here to Nigeria. A big thank you goes to the entire Endeavor Nigeria team, led by our MD, Iriayo, and by a wonderful team that has put together this event. My very special thanks goes also to all of you that are attending these sessions today. It is a great pleasure to have the closing remarks because it also forces you to listen to these wonderful contributions that we had today. And I would like to actually say there are a couple of really important and amazing themes. Bolaji Balogun started off by reminding us as entrepreneurs about the three elements that are so important of becoming successful around governance, character and competence, as well as the resilience that is required. I loved it when he said, if you find somebody with integrity, with character and competence, I think this is where you should invest. But Bolaji also highlighted the great opportunity. And now, as somebody that has spent the last 16, 17 years in this country, I'm often asked, how is it to run a company in Nigeria? And my answer is really, it's amazing actually. It is amazing because there's so many opportunities, and we had amazing and great examples of this today. So governance, character, competence, resilience. We had the example of GB from Flutterwave and from Tayo of Paga, who independently from each other highlighted the value of collaboration. Tayo spoke a lot about support, collaboration, how you can be very fast if you are alone, but if you want to do a long way, you do it better together. JB then alluded to the trust and the power of support. We also addressed today the important topic of failing forward. And I would like to say a special thank you to Peter, who shared a very simple advice to all of us, which is, let's really celebrate the good days. Because sometimes, yes, there are challenges. So great themes around support, collaboration. Now, what is the role of Endeavor in all of this? I think leaning on what Adrian said, Endeavor supports entrepreneurs here in Nigeria and in so many other countries in the world in breaking down the barriers that there are to become successful. It is helping entrepreneurs of scaling up their businesses. And it's encouraging entrepreneurs to then pay forward. The multiplier effect that was alluded to of a company like Flutterwave, Paga, or many international examples, and to be honest, I really wish that I can contribute with our companies as well, is mind-blowing. This is the catalyzing, the enabling power of an organization like Endeavor. Now, being here with the closing remarks, I would like to also share some very unique moments. And unique moments of our and my co-founder, Jasper Graf von Hardenberg, and my journey with Endeavor. And I would like to share a first unique moment that includes you, dear Suresh Shalaram, my esteemed co-board member of Endeavor Nigeria. There was a day when we got the invitation to attend to a dinner. Suresh had kindly hosted a dinner for the board and for entrepreneurs. My co-founder and I, that are not big in dining and wining, we said, we better go to this dinner, but we didn't know what to expect. I tell you, 2 hours later, on the way out, we said to each other, because we were in the process of aspiring to become Endeavor entrepreneurs, we said to each other in our local language, German, hey, we better make sure that we get into Endeavor. Because what we had experienced there, thank you to you, Suresh, not only the hospitality, but all of a sudden being part of what I call to Jasper, this is like the front page of Business Day, being live in front of you with so amazing people and so good advice that we got there. So thank you so much, Suresh, of having this key moment in our journey for Endeavor. But I would like to give you a second example. When you are then an Endeavor entrepreneur, there's something else happens. And I would like to refer here to a meeting that we had with Mr. Faisal Al-Khalil, who expressed as a board member an interest in our company Daystar, and who was not only asking for 5 minutes what Daystar renewable energy for industrial companies here in Nigeria was about, but he asked me to send him more background. Now, I did send him background, roughly 50 pages. Believe it or not, he read all of them. He sat down 1 hour with us and had really amazing and very valuable advice. My last really two unique moments are on a completely different level. It made us very proud recently to have one of our key people, Victor Ezemboku, going with Endeavor to Harvard, participating at the Harvard program of Endeavor, which is so important that our colleagues like Victor and others really have the great experience of accessing the best schools in the world out of Endeavor, Nigeria. My personal favorite, and then I come to an end, however, still remains a co-entrepreneur in Nigeria. I think he was on stage earlier, who came to me and said, "Christian, can I ask you a question?" I said everything. He said, "How is it to be an entrepreneur?" And believe me, I thought that he wanted to ask me, how is it to be an entrepreneur in Nigeria if you're originally from Germany or something of that nature? But he had a refreshing question. How is it actually to be an entrepreneur if you're already so old? Yeah? So, and I thought this is really a fantastic atmosphere. Look, there's so much more to say about Endeavor, about the Endeavor Catalyst Fund, here represented by Michelle. It's wonderful to have you here today as well, and amazing what you presented earlier. Now, with these great themes, I would like to really express my gratitude to all the speakers. I think in addition to Bolaji's words, to other speakers, Dalu from Standard Bank rounded it up again with an important theme of integrity, confidence, and trust. Thank you so much for this event, and it's a great pleasure of closing this here with thanking all our sponsors today, and permit me to go through a very wonderful list of people who made today's event possible. I start with the rocket ship sponsors. This is Chapel Hill Denham. This is 7-Up. Can I please all recommend you first to the right? They have a wonderful stand. They brought some drinks with them. Thank you, sorry. The diamond sponsors, the Trust Fund Pension, Lemfi, Shekel Mobility. Our sponsors, Film House, Datamelon, Omni Retail, AWS Startup, RMB, FSDH, Malta, and Paga. Our media partners, Locoset, Promo Media, Tech Cabal, and TechNest. And ladies and gentlemen, with this, Irea, you did as always a wonderful job. I would like to thank you, all of you, to come to the Catalyst Conversations, and I look forward to continue the dialogue over there with some refreshments. Thank you very much.
Ladies and gentlemen, a round of applause for Christian Wessels, the president and co-founder Daystar Power. I think you can do better than that. Come on, give a round of applause for Christian Wessels, the president and co-founder Daystar Power. That was a very powerful way to close the event. It's been a beautiful event, Catalysing Conversations 2024, or CC 2024. And this is not the last, definitely. So looking forward to another beautiful year. Do not forget, the masterclasses are about to begin. Exhibitions would also be on. The speed networking would also come right after the masterclasses. So there are ushers in different sections of the hall who are waiting to usher you into whatever masterclass that you are going to be taking right after this. So please do well to find your class and do well to locate your class. I did read out some of that. I'm just going to be reading out the masterclasses so you know how to find yours. There will be a presentation, Paga's presentation in one of the segments. There would also be masterclass number 1, strategic synergy, preparing for exits and mergers. Masterclass number 2 is financing and fundraising, and the ushers are stationed by the door, so it will be easier for you to locate your masterclass. Once again, a big thank you to Kristen Wessels for that powerful closing remark, and I just want to say that it's been a beautiful event. All the speakers, the fireside chats, the panel conversations, and of course the masterclasses that we're launching into here at Endeavor Nigeria. Remember that we are all about dreaming bigger, all about scaling faster, and all about paying it forward, and we're building a network of powerful business men and women. So thank you very much for taking out time to be here. Catalysing Conversations 2024 was centered around building bridges and co-creating a unified ecosystem. And I want to take this opportunity once again to thank my amazing co-host, Lele Balde Cameron, who did an amazing job in the first half of this event. And to remind you, my name is Blessings Mosugu, and it's been an absolute delight being here as your co-host. So please do well to enjoy the rest of your day, enjoy the masterclasses, check out the exhibitions, and of course the speed networking sections. Do have a lovely day. Thank you very much. and gentlemen, please be informed that the networking starts at 2:20 p.m. prompt. So please, you can have your tea breaks now, but the networking starts at 2 p.m. prompt. And then right after that, we'll have the master classes.